Morning. How are we all doing? Another Tuesday. We just had some news on the pound this morning. Not a lot of movement, but anyway. So how is everybody doing? How many have we got in here today? 27. That's pretty good. Good start. So just quickly looking at these pound pairs. A little bit of a drop on the pound. Nothing dramatic at the moment. So we'll see how this pans out for the rest of the day, but most of the pounds starting to come down a little bit, but nothing much. Morning, Giamond. So yeah, that was basically the claimant counts. It was actually positive by a long shot, so obviously the pounds come down. Go figure. So yeah, as I say, it's not massively negative news there, I don't think, so we don't need to worry about it too much. Morning, George. Morning, Big Zero. Morning, Paul. So today's news is obviously the big one is the CPI this afternoon at 12:30 UK. So this is an hour before the US Open. So this is going to be the key figure today for the next kind of 2 weeks. So if you look at when the next Fed announcement is, I think it's this final week, isn't it? No, must be the week before. Oh, sorry, yeah, it's there. Yeah, so sorry, it's next Wednesday. So yeah, we got FOMC and we got the Fed fund rate on Wednesday next week. So this is going to be the key next week as to what they're going to do. There's lots of talk about a freeze coming instead of going up to 5. So I'm not sure, but these CPI figures today will determine really what the Fed decides to do next week. So it's a critical day today. If these CPI figures come out as negative, there's a possibility they will freeze the rates. More likely, I would say, a probability they will freeze the rates, but we'll see. Depends how far they come down by. But if that happens, I would imagine we'll get a pretty decent tank on the US. If we get a big spike on the CPI figures, we're likely to see the US rocket because they will be going up to 5 on the interest rates. So the market will preempt an increase. When we get the increase, then we should get another pump on the US. So key day today, inflation figures, very, very important, as we know. So inflation is one of the leading indicators for directional bias. Morning, everybody. Morning, Dwee. Morning, Miami Dave. Morning, Fignia. I'm never going to get that right. Morning, Seymour. Morning, Joaquin. Adrian. Freeman. Freeman, you deleted your message and then put good morning. Did you say good morning in a different way? Right, so that's our news this morning. Morning, Mr. Brightside. Overnight news. Right, so overnight news. So there's a lot of speculation about rates at the minute. So traders price fewer than 50 basis point hikes through May. I never know where they get this traders from. That's a very, very, very broad term. Who are you talking about? Who are you polling? Did you go to 10 firms and ask them rather than the 2,500 that are trading the futures market? You know, what exactly is traders? So I wouldn't read too much into this until we get the figures on Thursday when Lagarde comes out and actually releases the figures and the press conference is underway. Morning, Philip. But there's a lot of that at the moment, a lot of speculation about new rates, and that's causing a lot of obviously crazy moves in the market at the minute. There's the UK unemployment changes. There you go, another one. Nomura, in March, we anticipate a 25 basis point rate cut and the end to quantitative tightening. In March, we anticipate a 25 basis point Fed rate cut. They're saying they're going to drop it. So that would be about, well, if that happens, it's goodbye US dollar, basically. Don't know where that came from. But anyway, yeah, so that's basically all the overnight news. Was a lot of speculation. I didn't read that right when I read it this morning. I read that as we anticipate 25 basis point hike, not cut. That means they're going to drop it, surely, to 4.5. That's not going to happen, is it? Or if it does, yeah, as I say, Get the hell out of those longs. But anyway, so that's all the news. DAX hasn't gone anywhere pre-market. We've just been flip-flopping around. Obviously, we had the massive sell-off at the open. This was the opening range breakout of the year so far. This was beautiful yesterday. You couldn't really have failed to make money on this yesterday. If you took the pre-market, if you took the 5, if you took the 10, the 15, whatever, you made money yesterday, a lot of it. If you held it, if you just let the EA do its course, you just either TP'd or you got out on a trailing stop somewhere in here. So yeah, beautiful yesterday. I don't anticipate that happening today. Hey, you never know. But looking at the DAX, we got 2 minutes to the open. We're down at support at the moment on the DAX. Let's scroll over a little bit more. So this is the area I highlighted previously earlier on in the week or last week, whenever I did. This area basically is kind of the last chance saloon, which is exactly where we stopped yesterday. If we break this low, we open the floodgates for a drop back down to support, and that's a long way away. So there's really not, I mean, there's a bit of a balance there for 2 days, but other than that, it's just flag breaks all the way. So this is really where we're heading back down to, this balance, either to test the top of that balance or to come back into it. So there's a massive drop, which is good news. I don't know how many ADR that is. 750 off of a 240. So it's a 3 ADR drop. So we'll see where we go this morning. But if you're looking long term and you're looking for a decent swing trade, there's your high. So we've broken this low here yesterday. We've left a massive propulsion gap in, and now we're retesting this low. So there's 2 scenarios I see playing out. Retest, drop, or return to source, obviously, back up into the range, or we just come out today and just go for it. So that would leave this propulsion gap untested. So the logical thing would be to test this first, but it all depends on the speed and strength of the market, doesn't it? So, okay, we're open. So opening range breakout, the pre-market 15 is there, which is now long. You've gone long. Oh my God, I'm not trading anything. I'm just talking. DAX open. Okay, I'm long DAX. It's a good job I set the E out, wasn't it? So I'm long on the DAX. Only managed to get 2 positions on. Yeah, so pre-market is open. So obviously moves to the upside anywhere really in there at all is a potential turning point today. This is not a propulsion gap. This is not a propulsion gap. This is just part of the down move. These are just the accelerated candlesticks. This is the speed movements. So if we're going to go up and test somewhere up in here, it's very difficult to pick a spot where you would potentially turn today on the DAX. Obviously, that's the low of Friday. So that would be your logical area where we supported. It's only been obviously hit once. So that's 125 ADR away. It's going to take a hell of a move to get there, isn't it? So it's really difficult to figure out what we're going to do on this one today. So we just have to let the market play out and see where it takes us. Morning, Stevie. Morning, Jacob. Morning, John. Morning, Andres. Big Papa. So didn't end too bad yesterday on the fivers. 1.8% yesterday. God, I wish that day hadn't have happened. Thursday last week. Ugh. If that day hadn't have happened, basically, I would be $300 away from target. Okay, so we're struggling at the pre-market highs at the minute. Now we're just running into these highs here. ADRs today, flat. Obviously, yesterday morning when we came in, everything was lit up like an absolute Christmas tree, wasn't it? We were totally red everywhere. So nothing there today. Miraculously, we've not hit any weeklies, which is quite astonishing, considering we had 225 ADR days, 250 plus ADR days yesterday, didn't we, across the board? So I'm quite surprised we haven't hit any weeklies. We will get some weeklies, I would imagine, triggered today. Euro New Zealand is really close to it hitting its weekly range off that drop. So a little bit more of a drop, an ADR on that today, and we're pretty much we're going to trigger a weekly range hit. There's a few others that are getting close to their weekly ranges as well. So keep your eyes on that today. Euro Yen is another one that's really squeezing at the moment. Nice push back actually yesterday. So, but yeah, loads of movement. Morning, Anna. We're doing analysis this morning. There's quite a few ADRs, not too many to look at. We'll look at those after the DAX has finished its morning stealing my money. Okay, so just sitting back down in this propulsion move. This isn't real market movement, though. This is brokered data. So if we reject those highs this morning and we come out the lows, we're looking at testing yesterday's low initially. If we break yesterday's low, yeah, look out below, basically. So we need to be watching this level down here, which is 148.77. So that's where I would kind of see, if we break that, we're running up to there. If we break that, God knows where. Coming down hard. Morning, Andy. Morning, Anna. We've got 70 people in here. We've only got 20 likes so far. Come on, hit the button. See if we can get... my target now is 150 people in the room. The only way we're going to get there is by liking the stream, because that attracts more people in. 150 people would be awesome. Okay, so there's your 5 minutes opening range in. I'm stopped out on the short, the long rather. Swiss yen's rallying quite nicely. So I've re-entered the long positions on the pre-market. So I'm just trading the pre-market here. Trying to get a tight breakout basically today. Fairly tight. But that's big, fairly big 5 minute. So the 5 minute range, 67. So it's quarter of an ADR on the 5 minute range. Fairly big move this morning. Not a huge amount of volume by the looks of things, though. We're not really flying anywhere like we did yesterday, are we? Come on, please, like to support. Yay. Go, Andy. Go, Andy. Morning, Bogdan. Bogdan. I don't know why I keep saying Bogdan. Bogdan. My English brain puts another O in there. Seems like you should have a vowel every other letter. You haven't. You've only got two. Okay, just sitting sideways at the moment. New moderator, Andy. Yeah. That's better. 40 likes. That's better. That's half the people in here that like me. We've got 90 people watching. There's 40 liking me. So obviously I haven't done much yet this morning. So you can like me when I've done something. If there's anything you want to do today, by the way, just let me know. Any pairs you want to look at, let me know. Someone's going to say gold in a minute. They always do. But if there's anything you want to cover, support resistance, how to draw that properly, all that sort of stuff. I can't read that, Andy. ITB works DS. Bro. It works. All right. Euro odd. Have a look at that. I just want to see what this DAX does. So I'm long again on the DAX. Long again on the pre-market break. See if we can get up this time. If we can break that high, we've got a good chance of rally at the highs today. I really think there's a good chance of a pullback into this today. If you look at the US indices yesterday and what they did, yeah. So the DAX, obviously, we had that massive collapse. So we did 300 pips yesterday, which is over 200 ADR, 225 ADR roughly to the downside. We had pulled back, but we pulled back into there. So actually, from an open to close perspective, we actually only did 86 pips to the downside, which is half an AD. No, such euro yen. Oh, wake up. Sorry, I was going to say that was a bit bigger than that, I thought. Yeah, sorry. So 610 pips to the downside. Yeah, 250 ADR. So this was more like 250 ADR plus. Then all we did was we hovered down here. If you look at the US indices, what the US indices did was they had a big flush down and then a big push back up again. So the US indices actually, when you look at where the open and the close is, we didn't go anywhere. Yeah, so we went nowhere on the US indices at all. The Dow was the only one that actually did manage to put a decent move in to the downside, but the S&P and the NASDAQ just basically went sideways yesterday. So the fact that we had a very small movement, actually the S&P went a bit further down, didn't it, than the NAS, but that's mainly because these have got banking sector in and the NASDAQ's got no banking in it, obviously. But you look at the difference with the Dow. I think this one is going to need to push back up again today, at least to come up and potentially retest either of these lows, which takes us back into the propulsion gap and give us a chance to see if this is actually a bear move starting, see if we're going to add into this position. So I'd favour a long rather than a short this morning, but obviously it depends what the market wants to do. Go the way the market's going. Nothing you can do about that. Right. Euro odd and gold so far. We'll have a look at those. Mohammed, how does pivots work? Don't know. Don't use them. Wrong place. I don't know. Don't do pivots. I do know this thing though. Called Google. And if you go to that website, they will give you all the information you need to know. We rejected the highs again. Whoa. Might have to get him out. I'm going to have to get him out. Mr. Wick. Mr. Wick. Looks like a short. We're not able to make any progress to the upside at the moment. That's going to stop me out on my long again. No, it's not, actually. Wasn't big enough push this time to bring my stop up, but don't be a whippy session. Okay, we'll see how that goes. It's inside bars at the moment, so it's not going anywhere, is it? We got CPI today, so things might hang around for that. Yeah, this is with the DAX. I was half expecting the DAX actually just to go for it today because CPI is much less effective on the DAX, obviously, and it will affect it later. But this morning, I wasn't expecting it really to be quite so sluggish. So I think you might be right. I think we might have this hanging around for CPI as well. But I would still expect it to give some kind of movement, but it obviously doesn't seem to want to at the moment. So we'll see. We're just retesting the 5-minute opening range lows. So this is our 15-minute opening range going in now. That's your low, the 15, that's your high. So a break of these levels today after now, I would suspect is the direction for the morning potentially, but we'll see. Pound US dollar, will it drop on the daily and retest the 196 area? We'll have a look at that in a minute. Good morning. I'm trading. What you are trading, hoping to grow my $30 account. Wouldn't do that. If you want to follow me and grow your $30 account, you'll still have about $60 in about 3 months' time, because I don't do high risk compounding. You want to go somewhere else if you need to compound a $30 account. But if you want to compound a $30 account, I would say probably go and get a job. Honest. You're not going to make any money with $30. Still in. Very wiki today. Okay. I'm going to let that run. I'm just going to get that up on my other monitor and monitor that. Get it up on the monitor and monitor it. That's not good. No, I think that might have stopped me out now. I know. Not quite. Right. So, talk that the Fed halting further rate increase is a bit premature. Yeah, me too. However, if the CPI comes down, I think there is an argument for it, to be honest. But we'll see. It's going to be a tricky one today. Tim, long CAD yen from last week, 5 positions. I struggle to do your advised big DD control with large lot size and a stop. Psychologically, I'd rather scale out as it goes up. You can do that. Where do you think the best position to take off my lowest long position? Have a look at that in a sec. CAD yen, $30. Yeah, you're missing 2 digits there. Yeah, as Jarmon says. If you want to grow a $30 account, all right. That's nice. That's lovely. Look at that. Look at that. Lovely. This is why we use 110% of our opening range as a stop. We don't get stopped out at the moment. Okay, so there's your 15-minute opening range. There's your 5. There's your pre-market. So at the moment, we're just mucking about inside everything. Yeah, if you want to grow a $30 account, you've got to compound it, basically. So you need to compound it to double it, which means you're going to need to risk somewhere between 10 to 20, 30% a trade. And you've got to get a lucky streak, basically. So it's gambling at the end of the day. You're better off taking that $30, walking into a casino, right, and sticking $10 in red or black and doing that multiple times until you get yourself up to $60. And then do it again. But this time put $15 on red or black and just keep doing that until you eventually walk out of the casino with nothing, or you don't. Because basically that's what you're doing in trading. Yeah, compounding doesn't work because the odds are against you. It's a 50-50 market. So you're not, compounding works on paper. I can do a spreadsheet which compounds a $1 account into a $1 million account on paper. But try executing that in the real world. It's not going to happen. Even the people that sell you a course, a compounding course, stay in their course. This ain't going to work. It doesn't work. It's great on paper, but in reality, if you want to start a business trading, you need a business revenue. Yeah, you can't start a business without a revenue stream. Yeah, you go and start a shop, you need 20 to 50K. You go and start an online services industry, you need 5 or 10K for marketing. You need staff. You're setting up trading, 30 to 50K, or don't bother because otherwise you can't trade. You can start with a couple of K, and I think a couple of K you could compound with a little bit better risk management. But anything less than that, it's just not worth it. But again, it's relative, isn't it? It depends what you need to earn. I don't know what your circumstances are. If you live in a country where you can live on $10 a month, yeah, $30 is a decent bankroll, isn't it? I don't know. But position trading is not going to do it. 1 in a million with a loot of luck. Yeah, 1 in a million with a lot of luck. Yeah. Morning, Yemen. Maybe paper trade while saving up for 1 or 2 paychecks. Yeah. What plan do I suggest to pass a prop firm? Cross your fingers and hope. This is a prop firm. My plan is to get target by getting into positions and hoping they go my way. I don't know what else to say. You trade your plan, you execute your plan. Your strategy either passes or fails depending on whether the market is nice or nasty to you. You just blown 2 accounts in the last week, you're over leveraged. Scale back your leveraging, yeah? I'm risking 0.5% per trade with a 1 ADR stop here. Too over leveraged. We're rejecting those highs again. Let's see. I'm going to do a video on prop. I'm going to do a detailed video on prop and the many ways, the pros and cons and all that sort of thing. How's my 5% account going? That's this one here. So I did 1.8% on it yesterday. The DAX is going to stop me out and annoy me all day today because we've got CPI coming and it's not going to go anywhere. I may need to turn that off in a minute. Yeah, it's doing all right. I had a really bad day last Thursday. I stopped myself at $700, which is half my loss. 1250's loss max. So obviously I wasn't at loss max. I was back to basically break even on it, but wasn't going well last week. Oh, come on, DAX. It's not doing anything. Right, let's do some analysis. I can't bear to watch it anymore. It's just going to annoy me all day. Okay. So let's start at the top. How many prop firms do you have running? 2. I have 3 accounts running at the moment with 2 prop firms. And lots of evaluations. I've got 3 evaluations running. Plus the 5ers. 4. Although the 5ers is a bit of an experiment. We'll talk about prop in a bit. Let me get some analysis done. Where did we start off with? Up the top, wasn't it? Euro odd. So Euro odd, basically, go away, John. So Euro odd at the moment is range bound. It's a long at the moment. So we've got COT on side, we've got retail shorting it, which means we need to go long. Fundamentals are fairly mixed, more negative, slightly negative euro. So it's a long at the moment. So I would be looking for pullback longs, which you've got right now this morning. You've just about got a 5-minute reversal alert, I think. Nope, not quite. So you're just about to get one here. Out of this propulsion, well, it's not really a propulsion gap. This is a V-shaped recovery. So when you're looking at propulsion gaps or wide range bar theory, or whatever you want to call it, but obviously I know there's a load of ICT people in here, so they'll be going, that's a fair value gap. It's a wide range bar. It's a V-shaped recovery. V-shaped recovery wide range bars are not as effective. They do work, obviously, because it is an area where we've had a strong amount of buying. That one there worked as well. But the best ones are accumulations where you get a break, which is a breakout. That's the best type of wide range bar because what you tend to find is you get a retest of support. So at the moment, this one is a long. So this is where I'd be taking it at the moment, obviously on 5-minute, but it's not extended on the hourly. It's not extended on the 4-hourly. So there's no real exhaustion there. What you're doing is you're basically trying to hop in on this trend move. Yeah. So hop in there. I would be worried about that. This is a really good propulsion gap. Accumulation, break. That's the type of propulsion gap I'm talking about. So there's a good downside target there. We've got 3 orphaned propulsion gaps at the lows and we've got 1 to target to the upside. So potentially a push up and drop, but that might get left behind. And obviously we've got news coming on Thursday with the ECB rates. So I suspect what we will probably find is something like that until Thursday, because no one's going to want to pile too much money into the euro until Lagarde has spoken. And obviously with all this stuff that we've got coming out with traders pricing in different points and all sorts of stuff, there's a lot of unknowns with what's expected. Lagarde has never ever said anything but we will be going up with 0.5% moving forward. That's what she said, and nothing's changed since. So you've got to be fairly bullish on the euro. The market's fairly bullish on the euro. Look at the COT report. Yeah, we got +4s, +3s across the board on all COT, apart from the US dollar and the New Zealand dollar. So the market is long. It won't go long forever, obviously. In a bull market, you get pullbacks. So you know, this could go either way, obviously, but I would, if I'm position trading this, I would want to be scaling into long positions rather than shorts at the moment. Thursday, this could all change, obviously. So, but there's no opportunities on the 4-hour RSI extensions, hourly, nothing. You've got more chance of getting a long like that one. There's a propulsion. Look, accumulation, break, retest, push. Yeah, that's the move I would like to take. However, if you want to jump into it long now, you can do. Bear in mind that you might have to scale into possibly 3 positions. That's your reward. Gold. I'm covering gold now, everybody. There's 105 people in here. We've got 55 likes. Press the button. 105 people in here, okay? I'm doing gold now. Yeah, Hafiz has just asked for it as well. I can guarantee you by the end of the session, I will have been asked for gold at least 3 to 4 times. I'm covering it now. So where are we? How far are we into the stream? 8:23. So roughly half an hour into the stream is gold. So if anybody comes on, remind them to go and watch the replay about half an hour in. I don't want to cover it once today because I get asked for it every 5 minutes. So gold is currently a short. This is a beautiful, beautiful, beautiful spot to be taking a short. So this is unemployment. This is previous FOMC. So this is the previous rate announcement. This is the previous unemployment figures. This is what we would expect to happen based on the US dollar being strong. However, if the US dollar does not increase interest rates when we expect them to next week by 0.25%, the US dollar will be coming down and gold will be going up. So this is just a US dollar cross at the end of the day. You are crossing gold with US dollar as in you are crossing euro with US dollar, pound with US dollar, New Zealand dollar and US dollar, etc. So US dollar is strong at the moment. All fundamentals point upwards for the US dollar. So the fact that we've got this big, strong drop at the moment is because of what's been happening with the SVB, yeah, with the Silicon Valley Bank issue. So the markets have tanked, which always drives the market into a complete frenzy. So money has been pulled out of the US dollar and put into safe havens, Swiss, yen, gold. Yeah, Swiss. Yeah, so it's basically, this is a reaction to the SVB failure, and everybody pulling money out of the US dollar. They've been bailed out, right? So we're now sitting, hovering, waiting for the CPI figures this afternoon to give us some guidance as to what the Fed is going to do next week. So your options on gold are, as always, it's either going to go long or short, and it's going to be based purely and 100% on fundamentals. The CPI and the interest rates are going to drive gold up or down. So what do you think is going to happen with CPI this afternoon is the question. I can't answer that. Am I trading based on ICT concepts? No, Sonia, I'm not. I like that. I think the Fed is going to raise interest rates, and I think we're probably going to get potentially lower than expected CPI figures, but I don't think they're going to be massively low. But I think they could also go up, CPI. So it's difficult to tell, but that's what I would be looking at. That's gold, right? At the moment, we're massively extended on RSI. Yeah, I'd be looking for some kind of pullback on gold down to propulsion and to support. Yeah, it's the same stuff. Happens over and over again. We've got a gap, we've got support, we've got a propulsion. We've also got a massive propulsion to the upside. So, you know, I talk about 50-50 odds all the time. One of these things is going to happen. It's going to do that and that, or it's going to do that and that. I don't know which, but that is your current analysis for gold. I'm much more short on it based on the fact that the US dollar is strong at the moment. It's still got the biggest interest rates in the world. Yeah. If you look at the key fundamentals on this, the interest rates are the best out there. Yeah. So if you want to make yourself attractive to investors, that's how you do it. So the New Zealand dollar and gold are the two shining lights at the moment. This is forecast to go up to 5, potentially next week. Yeah, make ourselves even more shiny, which means more people invest in our currency, which means gold comes down. So this is a knee-jerk reaction. Yeah, this is what we were doing before the idiots went crazy. Yeah, so I still like it as a short. But there you go. Lower time frames, obviously. Hourly RSI extension, that's got embedded. Oh, look at that Batman. Don't see those very often. That one didn't work at all. This is why I don't follow chart patterns. You got an M pattern reversal forming at the moment, potentially. So if we get a break of that low today, we've got the reversal alert on the hourly. That will open the floodgates for a target back down to here, potentially here, anywhere down there, really. But look, they get filled. That's what they're there for. They get filled. They always get filled. However, we've got that one to the upside for FOMC, yeah? Oh, DAX. Short the DAX. This is a whipsaw session, isn't it? This is a whipsaw. I'm just going to open the EA. I'm going to turn this off. I don't want to trade this morning. It's a mess. I'll just leave that open. It takes hours to MT5. Ugh, I can't bear it. MT5 needs its own VPS with 4 processors to even bloody run. It's awful. I want to get out of this. I don't want to be trading this morning. This is just going to be a whipsaw session. I don't like it. So when that actually does kick over, now I've clicked that button. In about 10 hours, this will turn over to MT5, and I'll be able to turn the EA off. I might cancel those off manually if it replaces them. Right, so that's gold. Thanks for the follow, Funigal. Welcome aboard. Just turn my volume up, can't hear. So that's gold done. Let me just read down. Pound US dollar. Will it drop to the daily and retest 196? I would, yeah, I mean, I'm short. Everything is short pound US dollar, definitely. Well, I say it is at the moment, yeah. So if you look at the pound US dollar, it's a big short at the moment. The thing that's sniping this off at the minute and not allowing it to do anything is this retail sentiment. The retail crowd are massively short in it. Thanks for the follow, Bagat. Welcome aboard. That one is what's scuppering at the moment. Yeah, we need to get the retail crowd long on it. And then obviously it opens up the floodgates to go short. At the moment, we're not getting it. So we're struggling because all we're doing is we're taking out every high. Retail is short. They're putting all the liquidity at the highs. When they need liquidity, they go up and get it. Yeah. So until the retail crowd drop, or they just go, right, we've had enough, we are going to drop. I think we're going to come back down somewhere and retest down here. So we've just taken out this high. It's a really good short, I think, at the moment. If you look at it on the 4 hour, especially, really, really, really nicely extended. We are very, very range bound on this one, and you're kind of sitting in the middle of the range at the minute. But that's your most recent high. And then you've got one, obviously, at the top, which is the double. Well, it's more of a triple top, isn't it? Yeah. Quadruple top, even. So those are your levels, basically. That's your previous resistance, broke, became support, came back up, retested it as, sorry, that's your previous support, became resistance, came back up, retested resistance. That is our retest area, somewhere around there, in that area there. Yeah, which is 1 ADR to 125. So you can either get into it now, because we're extended on the 4 hour. Welcome aboard, Adam. Short. Yeah, 4 hour short. So we're up here. We're expecting a pullback. Some point, some kind of pullback. But how big it's going to be, difficult to tell at the moment. And again, CPI figures and next week's FOMC all going to decide whether that does that or whether that does that. But I would prefer it short. Yeah, the pound fundamentals are not good. So we'll be looking for shorts on it. But as I say, at the moment, the retail crowd are shorting this, which means they are leaving all their liquidity there. So if they have large orders to fill and they start going short and they run out of liquidity, they will pop back up and grab the liquidity, which is up at these highs. So at the moment, it's looking like if we break the Asian lows today, we've got a fairly nice run back down into support, which is yesterday's low, which is ADR. This has kind of been tested, this gap here, but very, very, very marginally. So I would say that's probably still a valid and a good target. Ultimately, I think this will come down and break those lows at some point, but it's really going to be dependent on the CPI figures. So I like it short, definitely. I'd much rather be shorting it than longing it. Let's look at this thing. I'm long the DAX. It's the third stop out this morning. This is my last one. I'm not doing this anymore. DAX. Please let me open my MT5 terminal. Thank you. Off. Oh, no, I don't want to turn Algo trading off. No, sorry, didn't mean to do that. I just want to turn off the DAX. Come on. MT5. Why did you plague my life, sir? I hate you. Right, that's off. So I'm cancelling my shorts. You watch, I'm cancelling these shorts, right? When this goes short next, it's going to flush and it's going to disappear out the lows. You just watch. Right, I'm long the DAX. Either this works or it doesn't. If it doesn't, fine. If it does, brilliant. I'll get my money back. But that's about the best I'm going to do at the DAX this morning because it's just a whipsaw session. So just leave it alone. Right, pound US dollar, done. What was next? Morning Astro. I'm catching up on the chat, so I'm miles behind. CAD yen. Right, so CAD yen, you're in it long. Okay, so you didn't do aggressive drawdown control, Tim, no? And you're in what, 5 positions? So what's your average? What is your average on this at the minute? So if you're in 5 positions from last week, did you say? So you're in from here, aren't you, basically? On probably the... So you must be in on the 4 hour, yeah? Sorry, long from last week. So you're in from somewhere in there, I reckon. Or on the hourly. Potentially somewhere there. So you're in long from here, basically. You're in long from the drop, aren't you? So if you've got 5 positions on there, your average should be somewhere in the region of 98, yeah? 98 to 99. 98 to 99 and a half. 98 to 98 and a half, get it right. So you're probably coming close to your average, yeah? So if you haven't scaled out of any of this, 98.40 your average, yeah? 98.40, yeah, there you go, cool. So if your average is there, right? If you'd have done an aggressive drawdown control position down there, you'd be out already. Yeah. So you got 2 choices. I would let this run. I think we're going to come back up and retest here. So this was our support that we kept bouncing at, and then we came up a little bit higher and we started bouncing up here. Then we broke down, and since we've broken down, we've collapsed. This accumulation here, this area of balance, is where we stopped on the way down, and then we came out hard. So I would say we're coming back up to test this, and this is pretty much your average. So you've got 2 choices. You can either start getting out of positions and doing drawdown control. So it's what you can do. Thanks for the follow, guys, Paul and Jan. If you get in here, if you get out here rather on, say, that position you've taken down there somewhere and get out on that one, you can take that one off and get off of that one there. So you should be able to, if not that one, get out of that one maybe, for example. Start scaling out of it by getting rid of that one and rid of that one. You won't make any money on it, but you'll now be down to 3 positions, won't you? If this pushes down again and you get another reverse alert, you can add this position back on. So think about market structure, think into the future. We've had a reverse alert on the hourly. What's going to happen now? We're either going to push like that, or potentially we're going to do that. If we come back down here, you can add that position on again. So you take it off, no win, no loss. If it comes back down, you add this one back on again. Next time it bounces, you take it off again. You take that one off. Now you're left with 1 position. Yeah, that's the other option if you're not going to do aggressive drawdown control. Or you sit here and you wait. So you're not going to get that today, but actually, no, you might get that today, depending on what happens with CPI, because if CPI comes out as a negative, we might find some more weakness come through on the yen. Actually, no, if CPI comes out as a positive, we might find some more weakness in the yen, which means you're going to get that rally to the upside. So does that make sense? But aggressive drawdown control isn't necessarily required on 4 positions. If you feel uncomfortable though, do it. But the best trades you can do are the ones where, you know, you get this is pushing at the moment. So obviously you're not going to take this off. Whatever position you've got one probably somewhere down here, which is in profit at the moment. If you take that off now and do some drawdown control and come out with no loss on it, that's fine. You've still got 3 positions. You've got one up there somewhere, maybe getting out of that one. You've got one in there. I don't know. But if this pushes down again, get in again. Yeah. And the best trades are the ones that go like that. You get in, you get out. 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 You push down, get in, get out, get in, get out. Yeah. Don't forget what we spend our entire life doing is balance. Price discovery, balance. Price discovery, balance. Price discovery, no, not happy, balance. Price discovery, balance. So as long as the market is doing this sort of movement, you're always going to have options to add on multiple times and get out multiple times. This will come with experience, basically. Morning, Kang Ji. Thanks for the follow. 130 people watching. Come on, get some more likes, get some more thumbs up. See if we can get up to 150. That would be awesome. Okay, so that makes sense. But that's the alternative to aggressive drawdown control. But add it back on, yeah? If this, you know, you're in a position, if you're using the EA is going to do this for you automatically anyway, but you manually get out of that. When it comes down, it's going to get you back in on the next reversal alert as long as it's spread correctly. So get in again, get out again, get in again, get out again. If this thing goes into a balance down here and goes into a range, it's the best possible thing that can happen because you just keep banking, drawdown control, bank, drawdown control, bank, that one's gone, bank, drawdown to control, bank, out of everything, happy days. If it does that 3 or 4 times, you're done. Yeah, it doesn't have to go like that to get you out at your average. Your job is to bring your average down. So if you keep bringing your average down, eventually, if it keeps going like that, your average is going to be out. And all of a sudden you realize, Jesus, I've made money, made 2%. But yeah, just keep getting in and getting out and getting in and getting out. Pound US dollar done. CAD yen, where do you think? Just reading in the chat. Sorry, I was going to sing to myself. Maybe paper trade, yeah. What planned past prop? We'll have to talk about prop in a minute. How many prop fabs do you have? For any answer that one, people are always trying to pass these props too fast. They give you a month, use it. Take a stroll, not a sprint. Yeah, there's 2 ways to do it. Either you take a sprint, and then when you've passed, you stop, and then you stroll, or you stroll. But either way, you need to stroll at some point, otherwise you're never going to make money out of them. Euro US dollar. I want to look at Euro US dollar. So Euro, have I covered Euro US dollar? Range bound? No advantage. No, haven't. So Euro US dollar obviously is sideways at the minute. Just going to look at. Right, you stay there and you keep going. That's 1.5 hour. That's not going to help me today, is it? 1.5 hour. What's my profit on this? Jesus, if we do 200 ADR, yeah, likely. So let me just adjust my TPs. Not going to happen. Yeah, okay. Do I go for that break? So these 2 positions I've got on here, obviously, this is a really good example of why EAs can't trade like you and I can, right? I'm looking at this now. Yeah. On a normal day, I let the opening range breakout EA just do its thing and you'll get a breakout and it'll go and it'll bank profit or it'll make a loss or it'll do whatever. The EA can't be taught to go, right, hang on a minute. I've lost 269 this morning on this. So what should I now do? That's going to make me $108, which is going to get me some of that back. The original TP is out of reach at 200 ADR because of what happened yesterday. So I need to adjust. Yeah, you can't do any of that stuff. You've got to have a human being at the controls of any EA. Otherwise, it's never going to be able to make a profit long term because market conditions have changed. It doesn't know that we had a massive sell-off. And it doesn't know that the Silicon Valley Bank went bust. Yeah, can't deal with it, can it? So that's where I would adjust my TP to. But my consideration is now I'm looking at this thinking one of two scenarios is going to play out. We're either going to get that or we're going to get that. So if we're going to get the second scenario, why do I want a TP there? Because if we do break this high, there is nothing but clear sky. So go for the 150 ADR move or take both off there and bank just over $200, $220 and get back virtually all of this morning's move and go, yeah, this wasn't my morning, roughly break even. So those are my options. Do I go with the break-even option or the greedy option? Yeah, these are decisions you have to make, and there's no EA on the planet that can make that decision for you because it doesn't know what your week, month, day has been like. It doesn't know what other positions you've got open. You know, you can teach EAs to do all of this stuff, but it's very, 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 very complex, and you're almost creating an AI, aren't you? So I'm just going to leave those up there for the minute. I'm just going to monitor that high. I'm going to set a little alert up there just to remind me when we get there. If we get there, obviously, at the moment, it looks like what we're doing is we're just selling straight off of that level. So we haven't even got there. The way the DAX is going this morning, not holding up too much hope either. Anyway, Euro US dollar. Let's go back to that. So we just come out of resistance. So this area balance that we broke and went off, we came back down, and this area we've been basically flip-flopping around in. We've come out of that. So this one is obviously this week is all about the news. This afternoon, CPI, that's going to go like that or like that. On Thursday, rates, that's going to go like that with the euro. Yeah, don't know. At the moment, it's a short. The euro is a long, the US is a long, so there's no COT bias, there's no retail sentiment bias. The only thing you've got for this is fundamentals. Fundamentals are flat. We're range bound, basically, because these are strong pairs fighting each other. At the moment, though, we've got an M pattern on the RSI, got divergence, so it's a short, but that was yesterday. Your 5-minute reversal alert was this morning, yesterday afternoon, even up there. So I'll be looking for shorts on it at the moment, but obviously that's all going to change this afternoon. So it's pretty pointless doing any analysis on it. Technically, you're looking for a bounce here, long, but you've got a short target as well. I don't know. I would rather short it, but this afternoon I will come on and I will say something completely different because I've no idea. It depends what the CPI figures are. This afternoon's analysis on this is going to be different to this morning's. So if you want to play it intraday, I would say don't bother because the likelihood is you're going to get a London session like that because we're waiting until 12:30. Not there, there. Yeah, everything changes this afternoon at 12:30. So can't really help you with that. Euro, US dollar. Done. Morning retab. Morning's Hayton's flip flop. That's a great name. Pound US dollar. Ratib. Pretty much the same as. Have I not just covered pound US dollar? I've done pound US dollar. Haven't I? First thing I did. I need a little tick chart. I forget what I've done. I'm pretty sure I've done pound US dollar already. And have here said I want gold and I've done gold. Yeah, so I've done pound US dollar, haven't I? That's extended on the RSI on the 4 hour. For short. At the moment, it's a short. Very nice short as well. Target down here. However, again, CPI. That's going to go that or that this afternoon with an ADR. Yeah. So you're either going to come test that high or you're going to come back down and test support. So you've got two levels. Yeah. You've got this support here, thanks for the follow, which is ADR low. You've got that resistance there, previous support, which is ADR high. One of those is going to get tested at some point today. but fundamentals are short pound, long US. So that is obviously short pound US at the moment. As I say, stress at the moment. We don't know until this afternoon. So we will see. Yes, afternoon, Sonia. I already said that. 105 people. I have a cult. Don't say that because most of those end up committing suicide. When you say market, which market are you referring to? The market. The market in general. The market. What do you mean by the market? The market, you know, stuff you trade. Can we trade euro US dollar today at CPI and news? Yes, you can. Of course you can. How can you trade it? Sorry, how can you trade it? Right. So if you're going to news trade, I wouldn't recommend news trading, but if you do want to news trade, does that stop me out on that wick? No, good. Okay. Looks like we're retesting the highs on the DAX. So it looks like it wants to go long today. So I stress it looks like it wants to go long today. So watch that level. 151.28 for resistance. So if you want to trade this today, there's two ways to trade it, basically. If you're going to news trade, the vast majority of people, what they do with news trading is they straddle trade. So you can straddle trade any time frame you like. So you would put a high above there and there, an entry above there and low there, for example. 30-minute. Yeah, so just use the last 30-minute candle high and the previous 30-minute candle low. You're going to get roughly the same range, whatever you do. Swiss yen, first ADR of the day. Is that down? Up. Brilliant. That's weakness in the Swiss franc, is it? No, it's weakness in the yen. Okay, so it's yen is weak. So they're undoing the yen moves, which is lovely. Let's see what the Swiss franc is doing. So we did have a weak Swiss franc. It's not really, is it? So euro US dollar. So that is how you can do it. The other way is if the CPI figures come out and we get a strong push down, you wait for a retracement and then you try and short out the retracement. The trouble is you're never going to know where, and the stop placement is very difficult. In a nutshell, don't news trade. The best way to trade the news. Thanks for the follow, Michael. And Hoggy Show and Manuel Kiss. Good name. Sorry, Kang, did I say you as well? I'm not sure if I missed you. And Michael Joe. Look at all these subs coming in. This is awesome. So yeah, I'm not sure about news trading. Never have been. But the best thing to do is to try and get yourself into a position ahead of the news. So if you have an idea on where you think it's going, yeah, try and get yourself into a position in that direction. So euro US dollar, if you're anticipating higher than expected CPI figures, that would be great. So if inflation is going up, it means that the US dollar will usually push, which means obviously euro US dollar is going to come down. So you would hit the short button now, get into a trade. If it pushes up into those highs, you could short it again in the assumption that we are just going to stay in a range today. Yeah. And then basically, hopefully, you are in profit by the time the news comes out. Move to break even at the news. You're going to get one or two things happening. A whipsaw and then a move, or just a whipsaw, or you're going to get a propulsion move, which is quite often what we have on CPI and inflation figures and interest rates. So what happens in those instances is we literally just get a spread widening and then a propulsion move fast. It doesn't go up, doesn't go down, it just goes. If you're in your short position and that happens, that's how you make the money. If it goes against you, you will hopefully get stopped out at break even or get a little bit of slippage to a small loss, because you're going to get a lot of slippage around news events. That's how I trade, how I would trade the news. But I don't, because my analysis over a period of time tells me that news trading doesn't make me profit. So I like doing it because it's fun, but it is gambling. It's pure gambling. So yeah, there you go. That's the news. Nirav has a new ad, does he? I will keep an eye on. I've got the stream running in another window, so I will keep an eye on adverts to see if I can see a Nirav ad coming through. Are you going to live later? Yeah. No, I'm not going to trade the CPI news. I will be on at 120 as normal. I'm not going to trade through CPI. I don't trade CPI, but I will do an analysis of what's happened. CPI is out of your hands. Yeah. Look at my exposure at the moment. I'm a US dollar exposed long. Yeah. If CPI comes out as negative, I'm going to stop out in 3 positions. There's nothing you can do about it. You're in. Anything I've got US dollar wise, anything I've got in profit US dollar wise, I will break even it at the moment. Yeah. In fact, what I'll do ahead of the news is if I've got something that's sitting in 0.5%, I will bank it and I'll put it over here. Because that's realized profit. This is at the moment absolute nothing. Depending on what happens with the CPI figures, obviously they're either going to stop out or they're going to go Ponto, and I'm going to make $600 to $800, which is fine. But it's risk, isn't it? It's all risk. Aussie dollar, US dollar, Adam. Hourly. So there's no extensions on RSI for it at all. Your entry was here. That was your long. On the hourly, you haven't had one. Oh, it's the same one on the hourly. Look. That's what I took. Look, buy, exit. Yeah. So that was your trade last week. And it's come straight back up into resistance. So Aussie US at the moment is a short, the biggest short we've got. Yeah, COT is massively short, full short on the COT. Fundamentals are virtually all short apart from inflation change. That's the only way the Aussies are actually winning at the moment. Again, that will change today. Potentially that could change in the US's favor, which makes this a minus 10. So, and then we've got retail are long at the moment. So there's retail are long Aussie US. Actually, that's something we need to look at, isn't it? The retail. Just see what the retail sentiment is on the US dollar at the moment ahead of the news. Just wait for that to refresh. So retail is very, very mixed on the US dollar at the moment. We've got some long, some short, more short, more short, more long, more short. So there's more retail shorting the US dollar. Sorry, shorting against the US dollar at the moment. Actually, no, it's really mixed, isn't it? Actually, because that is long and short. There's no real advantage in either direction with the US dollars at the moment. Look. So we've got the Swiss franc. Obviously, we know everybody's longing US against the Swissy. Pound US is a short, which means it's long US. US CAD is a short, which means it's short US. Gold is a short, which means it's the other way. I mean, it's all completely mixed. So there's no advantage either direction for the US dollar. So there's no reason for them to drive it in either direction at the news either. So I would be looking for shorts on this, continuing this downward movement. So we've had the bounce at resistance. So at the moment, you have to assume that market structure is high, low, lower high, lower low, lower high, going for a lower low. So at the moment, the interim market structure on that is down, up, down, looking to move back into that gap. So this is a perfect spot to be shorting it. It's a 50% retracement on the move. So short now, drop down to M5. Reversal alert, in. Literally now. Down. There you go, that was an easy one, wasn't it? Didn't quite get an extension on the RSI though, or the 4 hour, so there's no real signal as far as I'm concerned, but that's what I would look for on that one. Already short on pound US and trying to spot the correct TP zone. Great filibuster. Pound US dollar TP. It all depends on the time frame. So you've got 5 minute, you've got a TP there. Definitely one there. That's a lovely accumulation break. That's 175 ADR. But to be honest, if you're getting in now, right, looking at how extended this is and this weakness we've had on the US dollar, we're on a 4-day push now. Well, 3 days. This is day 4. If you're short on this now, I wouldn't use a TP because there's a possibility of the CPI figures coming out positive this afternoon. And if that's the case, you're going to find yourself down here somewhere. So don't use a TP. If you've gotten into a trade here, right, and you've put a stop there or a stop there. I got TPs on my fib. Yeah. So let's say you've got into a short here, for example, and you've put your stop up there, right? There's your 1.5R, there's your 2R, there's your 4R. Yeah, don't stick a 1.5R or a 2R on it because that's only ADR. We've got CPI figures. There's every chance we could get a 200, 225, 300 ADR move depending on what happens. Yeah, so don't use a TP. What I would do is, if I'm short on this, I would wait for this thing to get really, really extended, have a little bit of a pullback and have a wobble. And then I would say, right, I'll put a trailer on it. And then if it goes down, excellent, I make more money. If it comes up, I get out with some money. Yeah. Doesn't matter how much, does it? As long as you're getting out with a profit. It's pushing up again at the moment, though. Look. Looks like we've got weakness just coming through on the US dollar, or is that pound strength? Strong pound. We've got a strong pound at the moment for some reason. And also a weak US dollar. Okay, so we just got the US dollar weakening and the pound strengthening ahead of the news. Thanks for the follow. Sam, Shah, welcome aboard. We got 138. Come on, we need another 12 people. Go and ring your mates. Tell them this is a crazy English bloke doing a stream. Can you look at Aussie New Zealand? I will do the RSIs as well in a minute. In fact, we're probably covering half of these as we go through, aren't we? So Aussie New Zealand is a short, massive short. This is the biggest short on the books at the minute. Yeah. So fundamentals are all negative, pretty much, apart from inflation. Cot, short, retail are all long Aussie New Zealand. So we want to be shorting it. And it's coming down. However, it is very extended now. So if you look at the 4 hour, this is our third extension literally in what? When was that? Last one. This month, basically. We're on the, 14th of the month. This is our third RSI extension this month already. So, sorry, DAX is just... Oh, that was a good alert, wasn't it, MT5? Thanks for the alert. Seriously, that didn't alert, did it? Oh, that's right, it hasn't hit my alert. That's right. I'll let it off. I'll let it off. This thing's stuck. Look at this. Christmas trees. Red, green, red, green. We need to do a John Wick Santa Claus meme, don't we? So yeah, Aussie New Zealand, like it to the downside, obviously. Looking for shorts on this. This is a pullback, basically. Market structure short on this. Fundamentals are short on this. We want to be shorting it. I've been looking to get in short on this, and I did get in short on this multiple times in here. Yeah, waiting for that break, and it never happened. And then I didn't bother anymore, and it went. So, as usual. There's a nice RSI extension there that I took long, and then I took a short, got out there, and then it collapsed. So I took a long. You know, this is the beauty of position trading. Yeah, doesn't matter which way you go. Most of the time, you're going to make money. But looking ideally for shorts on it, we've got these propulsion gaps to the upside, which keep getting left behind. This one got almost hit, or got tapped into. So that is kind of tested. We've got this huge propulsion gap here as well. Yeah, which is untested at the moment. So there's possibility of a pullback. So you're coming back into the 24.72 zone. Yeah, so in a trend, what we tend to do is we push, we pull back, we push, we pull back, we push, we pull back. Yeah, we move into the uptrend, we pull back, pull back, break down. Yeah, so market structure. So at the moment, we're obviously in short structure. So, however, we are coming down and we're very extended on the 4 hour. So I'd be looking for some kind of pullback. We're either going to pull back up into this area here and just keep driving south, or we're looking to come back up into this area here as a deeper pullback. But if we do that, I think we'd probably do that, which means that the EMAs will sort of flatten out as we get to them, and then we'll get another leg down, I think. So it's a tricky one. It's a short, but at the moment there is a signal to go long. So I would rather wait for us to get back up into that area, really, and assume that we are going to continue structure to the downside. Yeah, so if we're going to hold bearish structure, we're not going to break that high. So we're looking for areas above that we can get into shorts on. You've got this nice area of 2-3 day balance, which we came out of, came back, retested, rejected again. So we know that we're bearish. That would be the ultimate short. Aussie New Zealand. US dollar CAD, Marianne. So this is a tricky one because this is a long. The top bias at the moment is long on this. The reason US dollar CAD is tricky is because when the US dollar moves, the CAD tends to get dragged along with it because they're close trade partners. So each of their fundamentals affect each other because there's a crossover in economic terms in respect of their trading a lot. There's also an employment crossover a lot. So everything affects everything within these two. But at the moment, the US is the most attractive out of the two. From a fundamental perspective, from interest rates, there's very little between them. However, that will be changing next week, possibly. So it's a long all the time. It's the same as the euro pound. The euro is normally better, and the euro Swiss, the euro is normally better because it's the bigger economy, it's the bigger brother. Aussie, New Zealand, the Aussie is normally winning unless the economics say otherwise. So at the moment, this is a long. So you're looking for pullbacks. We've got a lovely pullback straight into support at the moment going on, which is rejecting nicely. Love it as a long. There is possibility to pull back down into ADR and retest this area here, which could well happen. But again, this is all going to be driven by the CPI figures this afternoon. So positive CPI long, negative CPI short. Usually, that's what we would expect. But you had a short entry there. As you can see, I've been shorted that as an ADR reversal here. So we had a big ADR push that day, which was that was 100 ADR. So scaled into that ADR push, looking for basically pull back down into propulsion and retest. Didn't get it, so I had to scale in now. So that was a counter trend, and this is why, this is a good example of why ideally you don't take counter trend. Counter trends are much harder to work than with trend, because with trend you tend to get faster, stronger pushes. With counter trend, the pullbacks are small, much smaller, until you get a big one, obviously. But when you're in an uptrend and it pushes down, the push up tends to be a lot stronger. So it's easier to get out of positions. That's why position trading works much better with trend where possible, or with fundamentals. Whatever you're using for your bias. If you're using the bias scorecard or you're using the moving averages, in most cases you will find that the moving averages, the 24 and the 72, will agree with the bias scorecard, because these are fundamental moving averages, and we're relying on fundamentals with regards to cotton and everything, aren't we? So everything usually lines up the same way anyway. So yeah, longs, basically. You had a reversal on that this morning, but it's more of a range-bound one. You know, we haven't pulled back and pushed hard up. We're just kind of flip-flopping. But again, I wouldn't expect a massive amount of movement ahead of 12:30. 12:30 will get the movement. We've got the propulsion gap here to test. We've got a gap fill as well from Monday. There's a lot of gaps at the moment still in play. And again, I would expect that. I'm positioned very, very long on the US at the minute. Oh, DAX, for God's sake. What's my risk on that? 60, I don't know. I'm just moving my stops up underneath wicks. So either we do that or I'm out and done with it this morning. It's just a chop fest. It's not got any legs. Can't make its mind up where to go. So, right, US dollar CAD. Kibria, hello Lee. Can you show our up symbol in chart at left? I tried to do that squeezing the market watch window to avoid bid and ask, but it's not working. So over here, I've still got those columns, yeah? What you do is if you put auto arrange on, which is default, they do that. Yeah, and if you try and adjust them, it goes ping and it won't let you. So you just turn off auto arrange, right click on the market watch, uncheck auto arrange, and then you can do what you like with it. Yeah, that's what you do. And then obviously when you want to switch pairs, you just click, drag, and let go. Aussie New Zealand, we've covered. US dollar CAD, we've covered. Where am I on the chat? Yes, I like that option. In out position trading. Would rather be out of some by CPI. Yeah. If you get, what were you in, Tim? It was a yen pair, wasn't it? CAD yen. So yeah, ahead of CPI, you've got one of two scenarios playing out, haven't you? It's either gonna pop or drop. At the moment, you're up near ADR already, so it's extended. So the chances of you getting a really strong one on this is a little bit less. But if we get a positive CPI figure and the market does decide to react accordingly, you're going to get a push on the CAD as well. So this could easily get you out. Was it CAD yen? It was CAD yen, wasn't it? Yeah. Gold will go down. Why, Lars? Sound, Kang? Yes, I've got sound. Your end if you haven't. Euro CAD. So look at Euro CAD. So Euro CAD's pushing at the minute. Euro CAD basically, all these euros are longs. We've got really good fundamentals on it at the moment. So the COT report is long and retail is all short. So you definitely want to be longing this at the minute. This morning's reverse alert it's just retested now, is a really good one. So we looked at this earlier, didn't we? Yeah, I'm sure we've looked at this already. This V shape. Or was I looking at a V shape on something else? Might have been another euro pair, don't know. But we're coming out of this balance at the minute. Price discovery, balance. We're down, back in, retesting that level and looks like we're rejecting. I like it as a long. However, depending on what happens with the US dollar this afternoon, we could have a big, strong move. So other news this week, don't forget, today is very, very important. I keep going on about today, but tomorrow we've got PPI and we've got retail sales. Yeah. And then the next day we've got the euro rates and the Aussie unemployment. So from this afternoon onwards, there is lots and lots and lots and lots of news. We've got the budget for the pound tomorrow as well. So thanks for the follow. Thanks for the follow, Alejandro. This is a key one, the annual budget for the pound. It's more, what we find out in this is more about what spending the government are doing, and what the government spends doesn't have a direct impact on the Forex markets because it's nothing to do with the bank. But it does have an impact in that you make your population poorer or weaker through taxation or not through taxation, or you have new services you want to employ, which means you have to do something. Like, for example, there's 45p going on a bottle of wine in a new alcohol tax in the UK. That's going to hurt pretty much the whole population. So that makes us poorer. The poorer we get, yeah, and it all has an impact on inflation and everything. So I wouldn't anticipate there being too much happening tomorrow in the pound, but we have to keep an eye on it. It's a difficult one. You do, I think, remember getting whipsawed on it quite a bit, but I wouldn't expect us to get a strong new fundamental direction off of the budget. So although that is red, it's more of a get ready for that sort of news rather than anything else. But yeah, we've got lots of other news coming up. So Euro, CAD, we've got CPI for the US, which is going to affect the CAD today in some respect. And then on Thursday, it's all going to go mad again. So, just be, EuroCAD's a bit of a tricky one. Thanks for the follow, Elwin. Welcome aboard. DAX going up. Yeah, it was. Not anymore. I'm out. I'm out of the DAX. DAX is my enemy today. US dollar better make me some money this afternoon. My last two complex trades over the last few weeks were on the S&P and gold. Kept going in and out and found that it didn't matter about my out of the money positions. No, it won't do. Shouldn't do most of the time. Gold broke the low. Yeah, we just had a US dollar pop, so but you won't get much movement on gold today. You won't get much movement on anything today ahead of CPI. We will go back up. Likelihood is wherever is established in the Asian range, the London will either stay within the Asian range or the London will pop out and pop back in again, or pop out and pop back in again. Yeah, they'll grab liquidity before the news. So any pushes outside, I would revert back in, especially if you get to a previous support resistance. At the moment, as you can see from the DAX, there's nothing. There's no volatility. There's nothing today. We ain't going nowhere, as I just found out. Big Les, by the way you scale in is a way a few traders of YouTube trade. Both I know are one, and a few been around over a decade. It works. Yeah, it does work. It's the way the banks trade, so of course it works. But it has inherent problems, which is covered in the bootcamp. Yeah, so if you're new in here and you don't know what I'm talking about, go to the website, Free Trading Education, and watch the Position Trading Bootcamp. I'll put a link in now. That is basically explains position trading and kind of what I'm explaining, which is basically getting into multiple positions. Sentiment EA, by the way. Oh, I haven't got it open. We took a loss yesterday on Sentiment EA. I'm still struggling with a few things on that I need to iron out, which I'll cover in a minute. Please like the stream if you appreciate the content. Andy, thank you. 94 likes, that's good. We've got 143 in here. We're 7 away from 150. Go and grab your friends. So Sentiment EA yesterday made a small loss. It's reset the P&L again, look. So we started this on the 7th, last Tuesday. Oh, why aren't you working? Why is MT4 not working now? Why is nothing working? Right, so yeah, we go. So we've made 17 grand, 17% return, sitting in 5-6%. So yesterday was the first day of loss. So far this morning, it's scaled out of a few little bits and pieces. But again, still, there's nothing much in here. Look at the drawdown. Yeah, that is over 1%. Apart from that, that's it. Yeah. Euro yen was over 1% this morning. That was at 1 point something, but that's pushed back. That was a little bit of euro yen closed out, I think. Yeah, oh no, sorry. How history? Time? Yeah. So it's Aussie yen, it's scaled out of. Euro CAD, it's scaled out of a little bit this morning. So so the euro pairs, it's scaling out of a little bit of on these because euro's been coming down a little bit. So, but yeah, it's doing all right. Just banked a little bit of loss, but you know, end of day today, this could be completely different. So we'll see what happens. But obviously on a news event, sentiment kind of goes out the window a bit, but it's still banking and it's not losing a lot, and it's sitting in somewhere between sort of 3 to 7% drawdown. So we'll see how it continues. But there's a few trades I'm struggling to think of to decide how to get out of, like the euro yen, for example. So, you know, it's pushing nicely at the moment, but it's not taking additional trades. It's probably better to actually see on here. Euro yen. Thanks for the follow, guys. Justin, Jay, Elwin, I think I said. Alejandro, I didn't say you, did I? Alejandro. And Johnson Johnson. Do you work for a drug company by any chance, Johnson & Johnson? So you can see how it's been scaling out, obviously. The problem we've got now is sentiment is 61% short, which means we're not taking longs. So I need to do a retest on this. And what I want to do at the moment is I'm testing basically to see what happens if we just leave it. And we trade against retail sentiment and we just leave it. And it either gets us out because it's doing end of day close in profit, or it scales us out to a point where it can get us out in end of day profit. So that's what I'm testing at the moment. The next test will be adding in, regardless, on a daily basis, of what happens to retail sentiment. So with the euro yen, where we've got 61% now, what it should have done this morning is go, right, okay, I am long on this. Retail is now not long to 75% extremes, so we'll just take another one anyway. Yeah. And we would be actually a lot more better off now, wouldn't we? So that's the next test to do. So I want to do this test, and then I want to retest it with that as the other option, which is that auto, which is the option to take additional trades if sentiment is not on side. So that option in the EA there, that's what I'm going to test next. But we'll see. It's doing all right at the minute. Right. Sorry, that was a sentiment EA. That's something I've got in development. For those that have been in here for a while know what it is. Nirav has a new ad. He's obviously benefited from this drop, and reinvested into his YouTube business. Yeah, I'm just going to refresh and see if I can get it. Oh, no. I've got something else coming up now. I haven't seen that one. Is he still talking about useless retail candlesticks, though? The useless retail candlesticks that he uses, which are useless. Is Nirav's volume data is another version of sentiment index? Yeah. No, it's good. It's good. What he does is you know, he's using volume footprints and stuff, but you know, his course tries to teach you how to do something which you really do need 5 years in a bank to understand. There's a lot easier ways to make money out of the market. Position trading being one of them. Morning, Neo. Morning, Stevie. How's the sentiment EA coming? I've just answered that one. You're well ahead of me. Hi, what are you using? Is it a trade manager? Do you mean the trade manager dashboard? This, yeah. This is for MT4, MT5. This is not a trade manager. It just shows you your exposure, yeah? So when you're position trading, oh my God. When you're position trading, you need to know your exposure, and you need to, this is an extreme test, so you wouldn't normally be this exposed, but I suppose with sentiment, and again, this is something else we need to think about with sentiment, isn't it? Overall exposure. But you need to know how many positions you've got on, what your overall exposure is on those positions, and where your P&L is for everything, yeah? So this is what the Trade Manager Dash does. Just shows you how your month, week, and everything is going. Look at this. It's reset again, guys. I'm not being funny, but you've seen me do this twice now. Oh, I didn't do it on the VPS, did I? I'm just resetting the date to when we started this test, this back test, or forward live test. It's a forward test, basically. So yeah, the Trade Manager dashboard shows you all of your trades, which you can't do in here easily at all. You can't do it in MT4 or MT5. So it just gives you your exposure. So you need to know when you're exposed. So if you know, normal exposure, which I teach in the bootcamp, you shouldn't have more than 2 positions on at a time in one direction on one instrument. So, you know, it's a case of I've seen a really good short on the US dollar yen. Should I take it? No, because you've already got exposure on the yen. Yeah, so this is what I'm looking at here. I'm like, my exposure, news is coming up today. This is a prime example of how you use the dash, the Trade Manager dash. Got news coming up today. It's on the US dollar. We're likely to get strong US dollar movement. What's my exposure on the US dollar? I'm overexposed long. So before that news comes out, I will probably want to break even that trade because it's in profit and potentially bank that one. So move that 0.14% over to my P&L and then break even that one. And then if the US dollar comes down against me, I'm going to get one I've banked, which is realized profit. One is not going to go into drawdown, and that one will go into drawdown. But the US dollar CAD was the one that I would be least worried about, because if the impact on this, because it's the US dollar on the CAD, will be much less than the others. So, you know, it's just to use exposure. You know, I can see that I am fully exposed on virtually every instrument apart from the pound at the moment. I could probably take another pound short. But everything else, I don't want to get in anymore, because otherwise, you know, if I've got 6 downward arrows on the CAD and the CAD flies, I'm dead. Yeah, so you need to be aware of all of this. So that's what the Trade Manager Dash is. It's on the website. I'll give you the link. You can go and have a look at it when you like. Secret Idiot. Sir, how you see gold? I've looked at gold. If you go and watch the replay of the video and go half an hour in, you'll find it. Oil, MPA, yeah. Haven't looked at oil yet. So oil we were looking at yesterday for a possible long. This area, was that an ADR or something? Or what was that? That was something profiting on the VPS, wasn't it? Let's turn that down. Off for a minute. So oil yesterday, we were looking at, you know, we're looking along, we're looking 107 a barrel, we're looking 85 for an interim target. There's lots of upside potential on oil at the moment, and that's where it's expected to go this year. So we've got this peak formation low, which we started bullish market structure on. We made a nice new lower, higher low. We put in a higher high. We came down and double bottomed. We were expecting to put in a new high. We didn't get it. We got a lower high, a contraction. Yeah, and then we pulled down and put in a higher low, contraction. So we were forming a symmetrical triangle. Then we put in a double top. Now we've put in a double bottom. Yeah, it's just not got any directional bias whatsoever. So we're assuming that we're range bound, trying to get in long, because that's where the market is expecting oil to go. We're pushing back down again. So there's a real danger at the moment of oil breaking this low. If so, coming down to retest here. So it's actually a really good opportunity to get into oil, I think, at the minute, because where we got this rejection yesterday, look at the size of this wick. We rejected this low again, and we pushed up really hard, left this propulsion gap. We've got a lovely big propulsion gap up there. Yeah. So there's upside targets on it at the moment, and we're pushing down. So I reckon anywhere down here is a good buy. And adding a second position when and if we come down to retest these lows, which is 175 ADR. So if you get in here and take 2 extra positions, roughly half an ADR apart, if you get reversal alerts, obviously down here, if it gets down here, I think this is the last chance saloon. If it breaks that area, I'd probably get out, because there's something wrong with gold, with oil, obviously. So demand is up. Yeah, so it's just, oil is a supply and demand product. Demand is up. China have reopened. China have started reaccepting imports of coal from Australia. Their economy is starting to kick back off. Their oil demand is gone through the roof because they need it. Barrel counts are down. Yeah. So supply is down. Demand is up. This should be going up. At the moment, it's stuck for some reason. I'm not quite sure why. We've got the new oil inventories coming out tomorrow. So that might be the catalyst that we need tomorrow when the oil inventories come out at 2:30 now, sorry, for this move to get started. So I reckon this is a pretty good level to start building along. So dropping down onto M15, waiting for the next reversal. You haven't got one at the moment because his whipsaw move that we had yesterday. M5, looking for the next reversal long, and just start a position on oil. And then obviously look at areas down below. So you'd be looking to scale in. It was 175, wasn't it? Where's that low? Let's mark it. So that's the low, which is 150 roughly. And then we've got obviously the low that we've double bottomed on, which is 100 ADR. Yeah. So that's the low. We can adjust that slightly now to be yesterday's low. So there's your entry. So you get in position 1, somewhere around here. Anywhere around here, you got the next reversal alert, would be position 2. If we came back down and swept that low and pushed back up, take a third. So roughly half an ADR between the positions. That one would be a little bit more like 3/4 of an ADR, but you can see the point. Scaling maybe with 2 positions, one there and one there. Roughly that's an ADR apart, isn't it? ADR on this is 27. If you got a reversal alert there and your second position was there, it's 33. So it's just over 1 ADR. Your average would be there. You only need a retest to that level to get out. In anywhere. Actually, no, your average would be roughly there. So that would be kind of a break even. But we're expecting that, aren't we? So good time to start looking to build a position on this. Look at the target, 107. Yeah, this is what Goldman and that are calling. They readjusted targets as well from 107 back down to something like 95 as an interim target. I'm looking at 85, which is basically just breaking the recent highs. So 85 is there. Yeah, so there's so much upside on it back up into here, which is basically these highs, taking these highs out. Once we take these highs out, we'll probably have a pullback and continuation, won't we? So we just got to get these highs challenged and taken out. Worst case scenario, challenging those highs and keeping this range intact is still like a 300 ADR move to the upside. So much room. So I really like it as a long. But I wait for signs of strength before you get in. So, you know, don't just buy it because it's coming down. It could continue to come down. So buy it when you get a structure break. Yeah. It looks good. I like oil for a long. Oh, DAX, look at you, you hideous beast. It's horrible today, man. Horrible. I just started Forex. What time frame should I be looking at? Hourly or 4 hourly, Justin? Concentrate on higher time frames to start with. Tim, Nirav, yes, same content, different window dressing. I'm desperately refreshing my stream to see if I can get a Nirav come up. No. Didn't get him again. Yes, got him. Stop. Pause. Here we go. Here he is. Let's get the volume up. Give up trading now. In front of them, inside the candlestick. Do not use useless retail candlestick charts. Look inside the useless retail candlestick charts. They tell you a level within inside of the useless retail candlestick charts that you should be trading from. However, it only has a success rate of about 20%. I know, I've tried it. Looks good though, doesn't it? Well, mainly because it costs about $1,000 and it just teaches you to trade retail candlestick charts. Thank you, Nirav. Bless. Right. That's everything covered in the chat. I think I'm caught up. Well, that didn't take long, did it? It's only 9:30, hour and a half. Does your EA need a VPS to run? No, you don't need a VPS to run, but I would say unless you can leave your PC on 24/7, then yes. Yeah. I used to. I had two PCs in my office. One of them was running 24/7, running my VPS. Well, it was my VPS basically. It was my PC, just running my EAs. But you know, for $25, you can get a pretty decent VPS. And to be honest, for $25 a month, I was probably spending way more than that on electricity running that thing 24/7, 365. So it doesn't make sense not to have a VPS. But no, you can just drag it onto the chart. So if you're talking about the market reversal alerts, yeah, just drag it onto the chart. Wherever it is. Or the opening range breakout EA, whichever one, you know, just drag it onto the chart, set it up, bang, run it. But you know, don't change time frame, don't change instrument. You know, if you're going to use this, you set that up, and then if you want to look at charts, you have to open a new window. Yeah, and you know, leave that running, minimize it, leave it. But that's why you use a VPS. Set it up, let it run, don't touch it. Much easier to have a VPS, and it's so cheap, so cheap. But don't use MT4's VPSs. They're awful. They're not proper VPSs. They're not real VPSs. They're clones of your platform, and they're incredibly difficult to understand what the hell's going on. Cav the world. I can't say your name. CACV the world. I'm back testing the market reverse alert CA and pound US dollar using the hedging set file, but for some reason it's not placing any trades. Right, so with the hedging set file, if you're not getting any trades, I must change this set file. But the reason you're not getting any trades is because of this setting here. Use spread filter, okay? So use spread filter in this set file is set to true. The reason the spread filter is set to true in this set file is because you're using the M5 time frame. Yeah, and obviously on M5 you are trading chop, and on chop you are going to get widespread. So it's designed to stop you getting spread by 5. The strategy tester. So what you do basically to make it take trades is you set that to false, right? Because what you're doing is in the strategy tester. I'm using tick data. So you got the spread current, yeah. The current spread on pound US dollar is 1 point. That's 10. That's 0. Yeah, so the current spread when you press that button is 10. 1 point. You've got your spread filter set to 5. So what I really need to do is change that to false or leave it at true and set that to 0. But either way, that's why. And it all depends on your broker. So it means your broker's got a big spread. That's all. So just do that and you'll suddenly find it will take trades for you. That's all it is. I should really change it. But the spread filter is quite important when you're trading M5 because you don't want to be trading on high spread instruments, really. Using MT4 for this year's data so far, no control points modeling. Got you. I got it running in 8 cap. Oh, well, there's your problem. You're trading with the worst broker in recorded history. Don't trade with 8 cap. You're using a prop firm, aren't you? That uses 8 cap. Just don't. Choose a proper prop firm. There's many prop firms out there with the same rules as the ones that use 8 cap, and they are 1,000 times better. Just don't use them. It's cheap. It's nasty. And look at this. It's like the DAX is today. It's cheap and nasty. It's horrible. Don't use it. prop firms, use my Forex funds or E8. Yeah, there's links to them on my website here. Those are who I use because they have tight spreads, high liquidity, and they just work. I just don't have a problem. And the rules are great. They're cheap. There's just no need to use these ones that use E8. They're just all white labels, basically. I'm just going to quickly run through. So the ADRs today, we've only had one, which is Swiss yen, which we had earlier. I'm just going to carry on with some analysis because now we've gone through the chat. What do I think of FTMO? They're good, but not as good as my Forex funds, in my opinion. I just can't find anybody better than my Forex funds from a financial perspective, target perspective, etc., etc. So I don't see any reason not to use them. But FTMO are good as well. Nothing wrong with FTMO. They're one of the first. As yes, Swiss yen. We're just about to get a reverse alert on the 5 minute. That's hit ADR today, and we're also up at yesterday's high. So this is potentially a sweep of yesterday's high. Everything's kind of tested to the downside. So, you know, we're doing that at the minute, aren't we? But that looks like potentially a good short. There's potential for movement on the yen this afternoon at 12:30 as well. We don't know obviously whether it's going to be up or down until the news comes out, but there is potential for it to move. So I would suggest that's not a bad looking short, that Swiss yen. We've had a bit of hit and miss on the yen, but look at the Swiss yen. What we've got here, when you're trading a safe haven against a safe haven type currency, you're going to get so much push and pull on it. Look how much it moves. Yeah, so if you get in here and it does push up, get in there and it'll push down, you'll get out. You can't really go wrong with it, really. Swiss yen. It just goes up and down all the time. Look, it's just an up and down instrument. High volatility at the moment. ADR's up on it, 121. So looks good. Good for a short. Just about to get the reversal alert there in a second. ADRs, that's ADRs covered. RSIs, so I think we might have covered half of these already, but there's no hourlies. So on my RSI dashboard, I split it into two, and I have the hourlies on the right and the 4 hourlies on the left. So these are the hourly RSI extensions above 30, above 70 and below 30. These are the 4 hours above 70, below 30, and obviously 75 and 80. So the further along, the more extended it is, the better the opportunity for a mean reversion and pullback. Morning creative channels. Is this live trade? Yeah, it is a live stream. I just said your name live. Proving it. That adjustment to the set file sorted it. Cool. Can you get 2 dashboards on one chart? No. In theory, yes, but no. Just have 2 dashboards. Why not just have like multiple dashes? It's much easier. Have you mentioned using M5H4 for mean reversion? Are you using the default set file for H4 M15 just set to M5? Yes, basically. Yeah, so all I've done is I'm switching over to M5 as my entry time frame, regardless of the H4 or the H1 extensions. I'm finding it's getting tighter entries. So M15, the trouble. Thanks for the follow, Blaze. Thanks. The trouble with M15 is if you look at an M15, if you compare, let's look at Aussie dollar Swiss because we're going to watch that one. Just turn it down. Do you get an echo, by the way, when you get those follows? Do you hear "thanks for the follow" echoed? I'm not sure whether it plays it out through the PC channel, and then you pick it up on the mic, or what. There's not a lot I can do about that, really. But anyway, so yeah, so if you look at Aussie dollar Swiss, for example, and where you got the 15-minute reversal alert, so we've got one there. And then we've just had one short there. So if you were going long, you'd go long there. If you're going short, you go short there. If you drop down to M5, you're not going to see it. This is a bad example because the M5 and the M15 are the same in this case. But there you can see, look, that's your M5 reversal alert. Your M15 reversal alert is actually down here. So because you get more reversal alerts on M5, when you're getting something, when you've entered a trade and it pushes against you and it pulls back down again, what you can often find is that the reverse alert for M15 is there and the reverse alert for M5 is there. So what happens is you get that sort of movement and it pushes up. And what you end up doing is having an M15 reversal alert, which is one ADR away from your first one. But with M5, you get one closer and tighter. And then you get another one, which means that the move down, it's easier to get out of it, basically, faster. So although we get very similar spacing a lot of the time, using M5, you will get some positions where you just get out that much quicker. The trouble with it is obviously occasionally you will get into more positions, which means your drawdown increases faster, which means you do aggressive drawdown, or you do drawdown control faster, potentially. But in a squeeze, it doesn't matter either way. And this is what I'm finding, yeah? So thanks for the follow, guys. Daniel and Maraden. So yeah, if you get into a squeeze, if you're looking at something like the CAD Swiss, it doesn't matter whether you've got a 5-minute or a 15-minute entry. Your distancing isn't going to be affected very much at all. So when you're not in a squeeze and we're in normal market conditions, it gets you out really, really fast with better profit. When you're in a squeeze, it makes no difference whatsoever. We can't do anything about those anyway. So I think 5-minute is actually a better entry time frame, just for using the market reversal alerts EA or manual. If you're doing it all manually, a lot of people are trading this manually. So Nasdaq, no point looking at the Nasdaq. That's this afternoon. That'll move. You reckon gold is breaking its support? Has it gone below the low of yesterday or the low of Asia today? You can answer that question yourself. How can I tell if that's breaking support now? It's certainly at the low, isn't it? But it's breaking support when it's done that. Then it's broken support. What I think is going to happen is it's going to come back up into there, because this thing ain't going anywhere until 12:30. They might push down into resistance, like I said earlier, and then pull it back up from there into that. But yeah, you're not going anywhere today on that. Not yet. 12:30. You will be. So 4 hours, we've got quite a few 4-hour RSI extensions. Aussie dollar Swiss, all of these Swisses basically, as you can see, we've got the Aussie dollar Swiss, we've got the CAD Swiss, pound Swiss isn't anymore, and the US dollar Swiss. So the Swiss franc has been obviously massively strong because this issue with SVB and money flying into safe havens. The Swiss gets a lot of money at those points, so does the yen. So really, really big, strong push down. So at the moment, it looks like we're bottoming out down here. The trouble is the Aussie's not very strong at the moment. So we've got a big, strong, embedded 4-hour RSI. This is a squeeze. You don't see these that often. When you do, that's a squeeze, basically. So there's a very, very, very good entry on these. If you're in them, obviously you're squeezed on them. If you're not in them, these are great opportunities for mean reversion. There's a possibility of putting in a V-shaped recovery, which will pull you back into the 24.72 zone, ready for a bounce down. Worst case scenario is you're coming back into this balance area here, which was the break, which is this propulsion gap. That will get retested. So there's two levels. There's a continuation of market structure, which could be that. It could be that. It could be a V-shaped recovery and then a continuation short. But either way, they're good mean reversion opportunities. But if you look at the Aussie dollar pairs, Aussie dollar Swiss, it is a short. However, it is kind of range bound short. Yeah. So at the moment, retail are longing it like crazy. There is so much retail on the Swiss at the moment. Yeah, longing it. Yeah, look at these Swissies. Yeah, so everything crossed with a Swiss is there. They are long the crap out of it. 98%, 97, 95, 92, 89, 78. It's coming down like a house of cards. All the time the market is wrong, there's no pressure for these pairs to go up because all the liquidity that they need to fill their orders when there's a squeeze on is down below the market. Every time retail hits that button, they put a stop in the market. If they need liquidity, they bring it down, and that's all they've been doing. All the time retail has been pressing the long button, they've been pressing the short. So it doesn't look good at the minute for any of these Swissies, but they are bottoming out. So there is a potential, I think we might just go into some kind of accumulation down here. But the Swiss franc is going to move really strongly on Thursday. So when we get those, the new interest rate figures coming out for the Eurozone, obviously the Swiss franc is going to move basically because 90% of the Eurozone banking goes through the Swiss National Bank. So big movements coming. So the question is it going to be an accumulation drop or accumulation pump? And this is really down to Lagarde and what is happening with all these rumors about the ECB rate hikes. We don't know what's going to happen. So if the ECB does decide to not go with a 0.5 on Thursday, let me just get rid of the yellows. So if the ECB does decide to not go with a 3.5 and for some reason comes out with a 3.25, which I find very, very difficult to believe, but or they come out with a 3.5 and then Lagarde says we don't see inflationary pressure as high or unemployment as weak, therefore we will be looking more towards the 0.25 instead of the 0.5, we might find we get a drop in the euro, in which case everything against the Swiss franc is going to play out. And at that point, obviously, retail is going to start to make some money. So it's really down to Thursday. And I think there's what we're probably going to see now with these Swiss franc pairs is an accumulation until Thursday. So Aussie Swiss, CAD Swiss, and again, CAD Swiss can get affected today, obviously, if we get strong US figures. But they're all the same, look. They're all virtually the same. They're massively extended, massively embedded. We got down to below 10. Yeah. It's got down to 6. We don't see that on 4-hour RSIs. This is, this is one of those fundamental events you can't do anything about. These are the months where if you're in Swiss franc pairs, you either hold on for dear life and you'll experience anything up to 20-25% drawdown on your account. If you hold it, though, it virtually always plays out. But it's not comfortable to hold at all. You can't do anything with it. Or you are scaling out on the way down or doing aggressive drawdown control, which isn't working. You're just taking losses and you have a losing month. Nothing you can do with them. So, but again, you just don't see them very often. Look on your charts. Try and find instances where we got above 90 or below 10. It's unbelievably rare. Just don't get it very often. Just doesn't happen on anything. So, these are, in our world of position trading, these are our black swan events. Nothing's going to stand in their way. So all of them, the CAD Swiss as well, the Euro Swiss to a certain extent as well, but that one is starting to play out already. We've had a bit of a push and we're stabilizing a bit on this one. However, we didn't manage to get above support. Look here. Yeah, turned into resistance, double tapped. We haven't got through. So again, this is all going to be kicking off on Thursday. That's when the big moves are going to come. So US dollar Swiss is the other 4-hour extension. Obviously, big extension again. Looking at it again. Yeah, we had one here. Look. And what was that? A fundamental shift. That was the Swiss National Bank announcement of interest rate change. Well, that was a Swiss National Bank interest rate change. You can't do that. It's a fundamental shift. Nothing you can do with those. So again, that's a lovely double bottom we're getting down here. So again, US dollar, really, really key, this one. So US dollar CPI, thank you very much. Possible 175 ADR move, yeah. This is why we have ADR on our charts, to show you the possibilities of where we're going. Yeah, we saw yesterday 200 ADRs. We see regularly 125, 150 ADRs. So, you know, when this news comes out today, you're thinking, if positive CPI figures come out, where could we possibly get to? Well, that's a given, isn't it? 125 ADR to 150 ADR is no problem whatsoever. Could we get 200 ADR? Yeah, depending on the figures. So that's the sort of move you could expect. So, you know, if you suddenly see big CPI figures coming out this afternoon and it does that and pulls back, do not get out, hold it. Yeah, there's every chance we're going to get 100 ADR is not guaranteed, but I'd take a bet on it hitting 100 ADR today, either up or down, depending on which way the CPI figures go. But yeah, so that one is very, very extended as well. Obviously, that's the US dollar Swiss. The other extensions we've got are the Aussie New Zealand. We've already looked at that one this morning, very extended to the downside, but that is a short. You should be shorting it, not longing it. However, you can still long and get out of these. So we've just broken a major support on that one. This area here, why did I draw that area in? An hourly? Don't know what that is. That might be from another pair. Let's get rid of that one. So yeah, Aussie New Zealand is coming down nicely. I'll be looking for RSI extensions to the upside to short that hourly more likely, because you're not going to get one. It's going to be hard to get one on the 4 hour now. This is coming down very, very hard, but that was your last entry short on there. So yeah, it all looks good, Aussie New Zealand, but I wouldn't be taking that as a mean reversion. Euro pound is extended to the downside. This is a really good entry long. I'm not in that, am I? No. Just seeing if I was in. I'm in it on my my Forex funds account, I think. Hello. I'm in New Zealand. Euro New Zealand sell. Sorry, one second. Yeah, I want to be out of that. Oh no, sorry, Euro New Zealand buy. 171 to 720. $171, $721. Sorry, I can't. There, I was in there. Okay. Sorry, sidetracked. So Euro pound, yeah, really like it as a long. So if you look at the scorecard for the Euro pound, it's range bound, right? But they've got a cop bias on the side. This is the simplified range scorecard. Let's look at the proper one. It's range bound. The fundamentals are mixed on this at the moment, mainly based on inflation is giving the euro a little bit of a plus. But the thing I like about this is the cop positioning. The euro is a long, the pound is a short right now. If Lagarde comes out on Thursday, interest rates go up with a 0.5, fantastic, euro long. If she comes out in the press conference and says, yeah, that's brilliant, everything's fine, but we are still going to continue with the 0.5s as expected, the euro is going to pop. The pound is really weak at the moment. That -2, which means that everybody at the moment is long euro pound, is going to stay where it is. So I would expect a spike to take them out and then a pop potentially. So I really, really like this as a long opportunity. But this is the area down here that I would be super interested in this if it can get down there, which is ADR today. So obviously that low, and some kind of either bounce out of that or sweep of that, I think it opens up coming all the way back up to this high. This is where I would look for us to eventually get to. But the euro pound is a very low ADR pair because we are close trade partners. But as you can see, for RSI extensions, it doesn't really matter which way you take it. This is a range bound pair. So any RSI extension that you take, you will make profit out of. It's just a case of, I would be a little bit more biased towards the upside on the euro, and this is exactly where we are now. Ready to get in with our longs. So we've had the reversal already this morning, but I would much rather it come down here. So this is the very bottom of this long range that we've got on the hourly at the moment. This is the intermediate range high and that high there. That would be absolutely beautiful down here. But if you get in long now, you've got an hourly reversal, which means you've had the 15-minute just. If you get in with it there, obviously you just got to prepare yourself to get into maybe two positions. So you get in one there, you get in one, this is that range here, these two levels, which is basically ADR. So you get in here, push down to ADR, take a set entry on the next reversal alert you find down there. That gives you an average down there. And then this thing should fly from there on Thursday. So either you get in it now and it just goes and everybody starts pricing in a Lagarde rise on Thursday and we go up anyway. We've got the pound tomorrow. Don't forget we've got the budget. Sorry, it's Wednesday, isn't it? Tomorrow? Yeah, the budget. So we've got the budget tomorrow. Yeah, so there's a good chance we'll get some movement on the pounds tomorrow. That could either devalue the pound and push this up, or value the pound and push it back down into that area we're looking to get longs in. So again, really like it as a long. Euro pound looks good. Nice extension on the 4 hour. It's already playing out. Look, if you took it on the M5, you're in already this morning in Asia. So yeah, looks good. Like it. The other ones we've got are the pound odd, pound CAD, and the pound US. So it's all the pound. So pounds mix on the pounds, 3 shorts on the Swiss, the US, and the New Zealand. Euro pound we just looked at as being in the middle. We've got pound CAD and pound odd long. Most of this is made up of retail sentiment and obviously cop bias. So all of these are kind of mixed. They're all range bound, but I would always be cautious with longing the pound at the moment. So any movement we get to the upside on the pound is not really because of the pound. It's usually because of the weakness in the opposite currency. Yeah. Thanks for the follow, Bruno. Welcome aboard. So yeah, I would be looking more for shorts and look at where we are with the pound odd at the moment. So we're just putting an M pattern reversal in up here potentially at the highs. So we got the limit order triggers, which pushed it back down again. We didn't get back down into that support. So I would expect that support to get retested at some point. We've got a propulsion cap target to the downside as well. We've just filled that propulsion gap. Yeah, we've also got this massive one down here. So we need some Aussie dollar strength, and that's the thing that we're struggling to get hold of at the moment. So it really depends on the pound, what happens with the budget, Euro pound 4 hour RSI extension. Looking at the hourly, it's kind of sitting in the middle. So the entry was on Friday last week. You had a short entry, but may or may not have got out of that if you took it on the hourly. Well, it's half an ADR, so I mean, I would have got out on it, but it hasn't come down to support yet. So this level, I would expect us to come down and retest at some point. I'm drawing stuff on the chart. So yeah, nice extension, lovely level. Potential for a big drop on that as well, depending on what happens in the budget. But the trouble, the real sting in the tail on this is the Australian dollar at the moment. This is more of a long range bound long at the moment. Cop bias is ever so slightly long. Retail crowd are shorting it. Yeah, that's why it's pushing up at the moment today, because the retail crowd are short. So it needs to come up and grab the liquidity, which it's done already. Yeah. So I like it from where it is. If you scale out and look at where we're potentially going, there's many, many areas here in this area of balance. Yeah. So if we break back above this area here, the most logical recent area for resistance is there. So we've got this area here. So that's been very, very well used in the past. Other than that, it's coming back up to those highs. But there's all these little spikes and bits and pieces in between. Yeah, so there's a lot of areas you could retest in there. But if that doesn't hold, we've got potential 475 pip movement to the upside, which is 3 ADR. So it wouldn't be a very pleasant ride if you went all the way up there. But, we're extended. So if we do start to break, we're extended again. And at some point, they're going to want to do a profit take move. So I would imagine you'll get up to there and it'll orderly, like it has, just climb up the stairs, basically. So you're always going to have opportunities to get out on the way up. But yeah, like it with a pound. But the pound economy is not good. However, obviously, if you've got something that's worse, it will beat it. So that's extended to the upside. Oh, it was. It's not anymore. So 69.28. It has slightly ticked up again since then. But we've also got the pound CAD and the pound US. So these are starting to come out of extensions. Look, starting to drop up here. Pound CAD. We all know what's going to happen potentially today with the CAD. We might get some strength off the US at a lovely level. Expecting US, and again, this is all to do with weakening off of the SVB stuff and, you know, general weakness in the US dollar running up to the CPI figures and all the news. So lovely propulsion gap target. Somewhere down here is your support. That's a lovely resistance. We've got a second resistance up there at 125. So you get in here with your first entry. M15 or M5. M15, you had it yesterday morning, yesterday late. M5, you've just had one today. So entries short, and then if you need to take a second, obviously it's somewhere around about 125 ADR. So you'll be getting into a second reversal on any signs of weakness up there. That looks good. And the pound US dollar is the other one, wasn't it? We've already looked at that, really, haven't we? CPI or don't know. One or the other, innit? Can't be more accurate than that. Euro IBOR drop. What? 3-month Euro IBOR drops 24.4 basis points, the most since 2001. What is a Euro IBOR? Euro interbank offered rate. Okay. It's not a figure we really concentrate on, but it's dropped, whatever that means. Let's have a look. What does that mean? I mean, just not good for the euro. Here we go. So that rate dropping is not good for the euro by those things. I know. It's going up against the Swiss. There. Never heard of that. Euro IBOR. Every day's a learning day. Every day's a school day. Right, let's catch up on the chat. What movie did you watch during the weekend? Well, there you go. There's a trading related question, Big Papa. What movie did I watch at the weekend? I can't remember. It was obviously that good. I did finish The Last of Us, watching The Last of Us last night. What am I going to do now every week? The Last of Us is over. I'm very, very sad. Oh, good. Anybody like The Last? Any Last of Us fans in here? Good Easter egg last night in the hospital. Good Easter egg. Bet everyone's going, what? No one's, and then everybody else is going, what's The Last of Us? Just catching up. It's not closed yet. What's 12:30, mate? CPI. AMC short squeeze technical analysis. If that is your name and you're asking what's happening at 12:30, you really need to rename yourself. If you're looking at technical analysis and you're not paying any attention to what's going on in the market, you're not going to last long. I've been holding CAD Swiss for months now. 15% drawdown. Hopefully we are hitting rock bottom down here. 4 trades. Positive swaps. So just waiting for CAD to power up. You've been holding it for months? Blimey. Keep on holding. It should go up. It's the CAD. The trouble is oil. This is the problem with CAD at the moment. Yeah. You know, Canadian dollars, Canadian's biggest export is oil. Oil has been stuck now for 3 months, the entire quarter of this year. Oil has not managed to make any progress. You know, this goes up, CAD GDP goes up, CAD GDP goes up, CAD goes up. It's just stuck. This is holding it back. It's very, very difficult. Market makers are loving these volatile markets, just taking the retail traders out both sides each week. Exactly. And as long as they keep doing that, we can keep getting in and out of our positions. Does the EA need BOs to run. Mick, I don't know what a BO is. Does the EA need BOs to run? I have no idea what that means, sorry. Is the CAD strong or weak at the moment? Well, look at the CAD. Aussie dollar CAD's been going up, which means it's weak. CAD Swiss is coming down, which means it's weak. CAD yen is coming down, which means it's weak. Euro CAD is going up, which means it's weak. It's weak, isn't it? A minute. Does the EA need a VPS to run? Sorry, right, okay. If you want to, yeah, I would advise it. But no, it doesn't need a VPS. Nothing needs a VPS. An EA, you just put an EA, that's not the right one. You put an EA on your chart. So you just drag it onto your chart and it works. However, if you change chart, if you change time frames, you change instruments, you do anything, it's not going to work, is it? So if you're going to use an EA, you place it on your chart and then minimize that and don't touch it. However, it's better to run it all on a VPS because you haven't got to worry. No spoilers, please, Alan says. Yeah, that's why I didn't say. That's why I didn't say. You got to have an eagle eye to spot as well. So, and if you haven't played the game, you haven't played the second season of the game, you won't know what the Easter egg potentially is. There's many Easter eggs actually last night for season 2, but anyway, that is very sad. I wasn't sad at what happens in it. I'm sad because it's finished. My wife will be very happy it's over. I've been like an excited child for the last 2 months. It's one of my favorite video games of all time. Euro rates dropping like UK base rate. Right, okay. Can you check out Aussie dollar, US dollar, Alan? I can. Aussie US. Aussie US. So, so from a fundamental perspective, it's a sell, big sell. Mainly because it's trading against the US dollar, and obviously we're expecting US dollar strength. But COT is short, retail is currently long, so it is still a good sell. Very extended though. So at the moment we're pulling back into resistance, rejected beautifully. So at the moment, obviously it's looking like we're getting a resistance bounce and a continuation on the trend. So shorts. I think we did look at this one already, didn't we? So yeah, this is a good area to get in as a short. I like this. Like it where it is. Reversal alert we just had on M5 this morning as they took out the Asian highs in London. There was a gap fill target to the downside at ADR. But, you know, whatever you do today in 2.5 hours, it's all going to kick off, isn't it? So whatever you do with this today, you're either going to be in drawdown or you're going to be in a nice amount of profit in 3 hours time. So long term though, I'd expect it to come down at the moment, but obviously if the CPI figures come out completely the other way, then no. The Last of Us Part 2 disappointed you big time. Don't ever talk to me again. I love The Last. It's very divisive actually, the second part. Some people loved it, some people hated it. Some people love Abby, some people hate Abby. Personally, I love both sections of the game. And they're going to split it up into 2 seasons as well. So we're going to get both halves of the story. I think they're going to do it the same way as they did in the game, which would be awesome. But it does last a very, very, very long time, the second game. Way bigger than the first one. So they should make some more series out of it, shouldn't they, really? TP might be bad this time. It might be good, Mayor. That's like saying a coin flip could end up as heads or tails. It could. Can you show how you take opposite trades from retail trader, Mick? So fundamental, so on the website, we've got retail sentiment. There is also combined sentiment. So retail sentiment and combined sentiment, you can use both either or. Actually, what I'll do is I'll go to combined sentiment because then I can show you retail and combined at the same time. But basically with retail sentiment, this data is gathered, which shows the current positioning of retail participants, basically broker data. So this shows you the percentage of people who are long and short in retail trade. So at the moment, New Zealand dollar CAD, 87% of the market are shorting. Yeah. So the way that the Forex markets work is the 10 big banks that move the vast majority. That's like a face. The vast majority of the movement is done by 10 banks, basically. And what they do is they move the market because they have to execute orders. And at the same time, they will build a position and make money. When they need to execute orders and they can't find liquidity, they will take out the highs and the lows of recent moves. Support and resistance, we call it. Or liquidity runs, or stop runs, whatever you want to call it. It's the same thing. It's the market just moving in market structure and taking out highs and lows. When you go short, if you use a stop loss, which 95% of retail traders do, if you go short and use a stop loss, you place it above the high. So let's look at New Zealand dollar CAD as an example. Yeah. So at the moment, they are shorting it. Yeah. 87% of the market is currently short on it, and they have been short on it for a while. I know they have because I've been watching it. So they go short. They put their stop at the high. Retail gets taken out because the market moves up. So they get in again because their trade idea they've got is still valid. Their signal they had is still valid. So they get in again. They get taken out. They get in again. They get taken out. They get in again and they go, woohoo, it's working. They add. They get taken out. They get in again. They get taken out. They get in again. They get in again. They get taken out. They get taken out. They get in again. Where's the liquidity right now? There. Because 87% of the market is short. So when the market, i.e. the banks, need to find liquidity, they move the market to the areas where the liquidity is sitting so that they can fulfill their orders. So the central banks have multiple desks. They have prop desks. They have commercial desks. They have all sorts of desks which in the FX world, in the FX market, their job is to execute positions on behalf of their customers. If I am a bank now and I have to execute $2 million worth, New Zealand dollars worth of transactions to convert them into Canadian dollar, I need to get that transaction done. My client will obviously want the best price possible. So what I will do is I will keep executing $2 million worth of orders here as long as I can. Areas of balance. Happy to trade here because there's a lot of people want to trade, so I will keep executing. Yeah. When all of a sudden I can't execute my orders anymore because nobody else wants to sell to me or buy from me, I will move the market up by executing orders and taking whatever liquidity is available. So if that liquidity, let's say I've got to buy New Zealand CAD, if that liquidity is not available there because there's nobody willing to sell to me, it will be up there. If I eat all of those orders and there's none left, I'll have to move up. If I eat all of those and there's none left, I'll have to move up. If I eat all of those orders and there's none left, i.e. there's nobody wanting to sell to me in here, then I'll have to move up to where everybody is willing to sell to me. What's sitting here if you're short? An order. Executed. Yeah. So that's why retail is wrong most of the time, because they place an order in the market that tells them to get out with a loss. The market moves and it takes that order and it gets them out with a loss. It does exactly what you tell it to do. If you hit the buy button now and put an order there to stop you out, the market will stop you out because the market moves up and down within an ADR 58% of the time. So 58% of the time, if you place an order in the market within an ADR, it's going to get hit. If that's a stop order, you're going to get stopped out. If you get into the market and say, I want to target that area there with a TP, and you don't use a stop, and the market moves down like that and then comes up and takes that liquidity, you make money. Removing your stop loss removes your loss. Removing your loss makes you profitable. That's what the banks do. That's what I do. That's what position trading is. Yeah. Understanding market movement. This area here is where we will move the vast majority of the time up and down. And, you know, you'll see we push up, we come down. Yeah. We start here in London, we push up, we come down. We push up, we come down. Yeah. That movement there, I think, was probably over an ADR. 95 on a 78. So that was just over an ADR. That was a nearly 125 ADR. And then it came back down again. But look at what it did on the way. It pushed up, it came down, pushed up, came down, pushed up, came down, pushed up, came down. Everybody in the world was getting liquidated in here. But what it was doing was pushing up overall because there was more liquidity at the highs than the lows. Why? Because retail are shorting it. 87% of the orders are sitting up there, not down there. So the market moves up. Yeah, that's the logic. If you go to this website, it explains sentiment in a little bit more detail, very easily with a chart. All right. Let's find a really simple one to explain it. Yeah, that's probably the most simple one you're ever going to find. All right. So this is retail. This is price. Yeah. Retail is going long. Price comes down. Retail go, oh crap, we're the wrong way. Let's short it. Price goes up. Then they go, oh crap, we're the wrong way. Go long. It goes down. Then they go, oh crap, we're the wrong way. Go short. And it goes up. Then they go, no, long. It goes short. Then they go, oh right, okay, we go short. And it goes long. This happens on every instrument. Retail is shorting. Price is going up. Retail has got no idea which way the market's going. All right, we're going to arrange for a bit. Retail is going massively long. Where do you think this market is going now on the DAX? Down. What did we get yesterday on the DAX? What is retail doing right now? Longing the crap out of it. Where's all the liquidity? Here. Yeah. That's retail sentiment. So if you are looking for a very short-term intraday bias, you can't go far wrong than trusting this. And this is what the EA I'm building is, the sentiment EA that I'm building at the moment. It literally trades contrarian to this. It opens a position in the morning in the opposite direction. At the end of the day, if it's in profit, it exits the position. Yeah. So all it's doing is literally trading contra. It's done it again, look. Why can't you just... It's so annoying, the history. Why won't it just remember what I asked? I asked it for that. Why doesn't it remember it? It's just so annoying. So yeah, literally all this is EA is doing is getting in. So if we look at something like Aussie dollar Swiss. Actually, let's just grab one off of here live. Euro US dollar. Yeah, so Euro US dollar, we're in a sell here. Yeah, because the market's not, that's not a good example because it's one that's gone the other way. There you go. So New Zealand dollar Swiss, yeah, we've got sell orders on. We've got two sell orders on. So we got in here and we got in here this morning, something like that. It's selling because the market at the moment is logging New Zealand dollar Swiss. So what the EA is doing, it says get in the morning, and if at the end of the day you're in profit, get out. It wasn't. So it got in again, says if at the end of the day you're in profit, get out. So what it will do is if the market ends up down here today, it will just close those positions out and bank it. And it would continue to trade against the market until it can get out of its position with a profit. Literally, it's just doing something very, very simple, which is taking the contrarian view to the retail market, which, as you can see, is what the market does. Retail is going short. Market is going long. Retail is going long. Market is going short. No idea. Let's short it. Okay. No, let's long it. Okay. It's just what happens and has happened forever. Because for the market to be able to execute its orders, it needs liquidity. And we provide liquidity in the form of stop orders. It knows where the stop orders are because everybody in the world is told to put their stops in the same place. Why do you think market structure does that? Why do you think they take the low out? Why do you think they take the high out? That low taken out. That low taken out. That high taken out. That high taken out. That low taken out. That low taken out. That high is still intact with liquidity. So is that one. Well done. Retail got it right. Sometimes they win, yeah, sometimes they win. But this isn't covered in the bootcamp. This is something new that I've developed this year. This isn't position trading. This is you're better off using this for intraday. So if you use combined sentiment, which is the better version in my opinion, if you just select the sixes, minus sixes and minus sixes and plus sixes, and potentially the fives and the minus fives if you want to be a little looser, this basically means you are getting in line with COT, which is the commitment of traders, which is the positional direction in the futures market. So this is futures market positioning. This is retail, the opposite direction. So if you've got a +6, it means you're getting in line with the big boys, the retail trend, the fundamental trend, and retail are the wrong side. So you've got more chance of things going up with these, like New Zealand dollar CAD, you know. So you'll be looking for long positions, New Zealand dollar CAD, yeah. So good long now. We had a long there, M pattern. A W pattern. So look for it to go up because that's where the liquidity is, isn't it? New Zealand CAD, they're shorting it. That's where their money is. Anybody that got in yesterday in the New York session, they got a whack and great order up there saying, get me out the market if it pushes up. So the market's going to go, all right, I will. Remove that and become a position trader. And what will happen is the market will come up and it will take that liquidity and then it will pull down to entice people short. Yeah. So you get in here, you get in here, you get out here with a profit, but don't put an order in to tell the market to get you out with a loss because it will get you out with a loss. That's you're doing that. You are literally telling the market to lose you money every time you use a stop loss or a stop profit, as I'm now calling it. So that's how you do the opposite to retail. Mayo, pound US dollar is at resistance. CPI might dump it. It might do. It might pump it. CPI won't really be in control of anything. CPI is just a figure that will decide which way the US dollar goes this afternoon. Thanks for the follow, Hector and JB. Sorry, I missed some people. Daikon, Raj. Daikon for FX Lifestyle. Muzamil as well. So yeah, there you go. It's not nasty, it's just business. Yeah. The bank's job is to move the market and execute orders. Yeah, I've said this. You know, it's kind of like what I say in the boot camp. What happens with these desks? This is why these sessions are on there. Yeah, in Asia, they will build a book. They will pass that over to the London office, and the London office will be given a position, a bank position, which is either long or short bias. And their job will be to execute their orders and take it in the bias that makes the bank money. They will then pass it over to New York and tell New York what the best thing to do this afternoon to make money is, because the bank's positioning is short or long net. Yeah, they don't say go short because we've got a stop loss above here. No, of course they don't. If the stop loss was to get hit, they'd lose $40 billion or something ridiculous. They don't use stop losses. They build positions in the market. And if you stay in line with COT and overall directional bias of the banks and don't use a stop loss, the likelihood is you're going to get driven that way, which is why we pay attention to the fundamentals, because this is what drives the market. Thank you for explaining how liquidity and sentiment works. I struggle to understand this. It's very simple. And you don't need to worry about it. If you're a position trader, you don't need to worry about it. Literally, you can hit the button right now on any position, like New Zealand dollar CAD, extended on 4 hour, hit the short button. What's going to happen? It's going to come down. You're going to get out. Fantastic. It's going to go up. Excellent. Get another position on. When it comes down, get out. No? All right. We'll get in again when it goes up and wait for it to come down and get out. But all of these 3 positions will average you into an exit because the market moves up and down, because it has to, because the banks have to fill their orders. And the banks have to take profit on large moves. This is why ADRs work. This is why the reversal alerts EA has the setting for ADR reversal trades. When we hit ADR, it means we've gone parabolic. That means the banks have a massive long position on in huge amounts of profit. To realize that profit, they have to hit the opposite button, sell. When they sell, they will start moving the market down. When the market moves down, people will jump on board and sell, which creates a large move to the downside. Profit take, push, pull, pull, push, push, pull, push, pull, push, pull. It's profit take. That move there has had a profit take. Banks sold, they took profit. Added, sold, took profit. Added, sold, took profit. Added, sold, took profit, flip direction, bought, took profit. Bought, will take profit. Buy, market structure. But try and trade market structure without a stop loss, and all of a sudden your P&L goes green. Unless you're getting a squeeze, and there's nothing you can do. You deal with it, drawdown control. All explained in the bootcamp on the website. Go watch it. So you don't put stop loss if you don't want to be out. Exactly. Is the sentiment EA available? No. No. This is something in development. I'm still figuring it out. I'm testing. The problem with sentiment is you can't back test it because the sentiment data isn't available in NT4. So, I can't create an indicator really to plot sentiment. It's too complicated. So I'm forward testing it. I can back test scenarios which I know will work, but I'm just figuring out how to execute them best with the EA at the moment. So it's in development. It's probably not going to be a fast one, to be honest. But so far, so good. Just getting in and out. But I need to work out how to deal with these ones, like US dollar CAD. You know, I've got to deal with these trades, which I have the facilities in the EA to deal with them how I think is best to deal with them. But and basically turning them into position trades. Actually, the sentiment's right on this one, so it is actually trading. So, you know, look at this today, yeah, where we are right now with these 5 positions on, because sentiment is, you know, there's a short sentiment, so we want to be longing it. So we are longing it. We're just in a drawdown at the moment. But one pop on the US dollar to take out this liquidity, and we're done. With a substantial profit. Yeah, and this is the beauty of trading sentiment, is the profits of when you get the profits, the big days. You sit in drawdown for a bit, but this is position trading in general, isn't it? We're used to this. You sit in drawdown for a bit, you take some drawdown control, all of a sudden you get big days. Those are the ones which make you the monies. Makes you the monies. I'll just shut that. Right. Do you think people are going long pound US dollar and it will dump? Right. Well, Mayo, this here, sentiment has nothing to do with the news. The news pays no attention to this. What I'm talking with sentiment, when you're looking at retail sentiment, what all this is doing is showing you where the vast majority of the orders are. So on a normal day, when the bank is trading normally, it will want to go and find liquidity. Yeah, so it just goes and finds that liquidity wherever it may be sitting. Yeah, so it's grabbing the liquidity, enticing the shorts to put the stops in, to grab the liquidity, to entice the shorts, to put the stops in, rinse, repeat until it gets to news. When it gets to news, if retail are short and that news comes out and that needs to drop, it will drop. Retail will make a fortune. Well done, retail. News has nothing to do with retail sentiment. That's, you know, so this is, you know, the fact that this is a short right now, or let's find a US dollar. The fact that 83% of the market is now short the pound US dollar would indicate that you want to be longing the pound US dollar. Ta-da, right? But when the news comes out for CPI, they won't go long just because everybody is retail is short. They will go whichever way they need to because they are positioning themselves for the next interest rate announcement next week. And that's what they will do. Yeah. And retail will win or retail will lose. So sentiment won't work over news because news trumps everything. There's nothing you can do. Yeah. There is no, you know, there's no holy grail. There's no, this is going to work all the time. That is going to work all the time. Everything is different. Yeah. Every time. So if you're trading sentiment, you're trading sentiment. You're better off trading this, to be honest, with a stop loss. This is what I'm doing here. So I'm using a 1 ADR stop. Every trade you see here in green is all counter sentiment or with bias. Yeah. Look at the bias. And look at what I'm trading. Same stuff. sticking in line with the big boys, and I'm trying as much as possible to stick in line with sentiment for retail, against the sentiment for retail. But this is a prop firm that I need to use stop in this. But I'm putting my stop 1 ADR apart. You know, I'm not putting stop losses in the market, you know, close to price. Yeah, my stops here on my buy. It's an ADR away from my entry. Because I don't want to get stopped out. I want to bank profit. I don't want to stop out. Do you reckon that Wyckoff method helps to see it? If you want to trade Wyckoff, trade Wyckoff. Wyckoff uses stops, doesn't he? Stop loss, stop profit. How about take loss? Yeah, well, that's a TP. A TP is a take loss. You know, TP is a stop loss, basically. If you put a TP in the market will go and hit your TP. Takes you out of your profit, doesn't it? Because if it goes 3 ADR further, you've lost. Look at me yesterday on the DAX, right? Look at my TP. What did that do? Stopped all that profit. There is no order you can place in the market. When you get into the market with a market order, there is no order you can place in the market that does not stop you making money the vast majority of the time. Because very, very rarely ever will you pick the top or the bottom. You won't. That's why everybody gets killed, because they're trying to pick the tops and the bottoms. It's all covered in day 1 on the bootcamp in this video. In fact, I think it's probably set up because we looked at this slide yesterday, didn't we? Yeah. It's all covered in this slide on the bootcamp. If you can ever get past the ads. I hate these 1 of 2 ads. It's really annoying. I don't want to set up a Shopify shop. Yeah. Which of the following do you identify? This is day 1 of the bootcamp. Every single trader trying to pick the top and bottom of the range, trying to pick the pullback point in a trend. Fear of missing out, getting stopped out all the time on most of the entries, not being able to hold on to your winning trades. Yeah, getting in just because the market turns the other way. Moving to breaking even and getting stopped out on a pullback. Yeah, revenge trading because of pretty much everything above there. You know, it's just not being able to pick the right support and resistance levels, or supply and demand, whatever you want to call it. It's all the same stuff. Yeah, this is all fixed very easily in position trading because you don't put a market order in to tell you to lose all of this. It's very simple. But it comes with other dangers. So, but Wyckoff, yeah, I mean, Wyckoff, there's a Wyckoff spring there, isn't there? Look, that's a Wyckoff spring. Move down, range, Wyckoff spring, symmetrical triangle break, high. But, you know, it's like everything. It will fail a lot. But if you want to use Wyckoff, use Wyckoff. Wyckoff is just another version of everything else. It's a support and resistance, supply and demand based strategy, which is everything I do. Yeah. What are all these lines on my chart? Yeah. It's the only thing that works. Because market structure moves between these levels. So that's all you need to be aware of, really, and how strong the market has moved. This client sentiment DAX is from prior day, not current data. Client sentiment DAX. I don't know what you mean, Tom. You mean the sentiment on here? There is no DAX sentiment. It's Forex. Don't have sentiment on the DAX. I don't believe that sentiment on the DAX is on indices is correct to use because the indices are not manipulated in the same way as Forex pairs are. The indices are a index of tangible products, which is stock values, whereas Forex is an exchange rate. It's not a tangible rate, tangible price as such. So the manipulation is not done in the FX, in the indices, the way the FX is done. So I don't use sentiment at all in indices. Look at that DAX today. Horrible, horrible mess. Hot data is 7 days behind. So are these position trades held for days or weeks? Yeah, it's all covered in the bootcamp. Hot data is always delayed by a week. Yeah. Is position trading good for prop firm? Not really, no. Prop firms, you really want to be scalping or swing trading with stops, and inherently there's your problem. And that's why everybody fails. And they know that. They're not stupid, yeah? Prop firms are not stupid. They know that to trade properly and make money, if you're going to use a stop loss, your odds are going to run out at some point, yeah? So I'm having, look at this, it's all green. Every single trade's green. Wicked. Tomorrow, every single trade will be red. Oh. Yeah, they know this. You cannot sustain, there is no strategy in the world that can sustain a winning run long enough to pass a prop and keep a prop. Yeah, prop firms know this. So you get, the reason they give you 2 evaluation phases is because by the time you've passed phase 1 and phase 2, you've had the luckiest streak of your life. When you get that prop firm account, and if anybody in here has had a funded account, they know 80% of people, more I would say, blow their prop firm funded account before they get a payout. Because to get a winning run where you actually get long enough to get paid and hold it for a month is just very, 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 very hard to achieve. Because the best traders in the world are going to have 5 to 10% drawdown on their account. The best. We're not the best. You're not the best. Yeah. Some point in your strategy, it's going to exceed that and you're going to blow it. They know that. And then you're going to go back to phase 1 and give them another $500. Prop is not set for position trading. They know that if you didn't use a stop loss, you would have a much higher probability of success, but therefore your drawdown has a higher probability of exceeding that 10% level. And most successful traders, look at prop firms, look at hedge firms, right? Hedge funds, prop firms, investment banks, pension portfolios, average drawdown, 25 to 45%. That's their average drawdown in an institution, on a firm, on a fund, right? So why do you think prop set it at 10%? Because they know you can't achieve it. They're not silly. There are ways to get around it. And as I said, I'll do a video on prop at some point and show you how to do it. But I blow many, many accounts. I was in a squeeze around 4+%, but was being an escape artist and managed to cut it to +1. Exactly. Perfect. I mean, I've got some trades in there. Look, I mean, in here, there's a load of ADR trades in here. From, you know, let's say, they're all, but these are all position trades. Yeah. So long, didn't work out. Long, didn't work out. Long, happy. Short, didn't work out. Short, happy. And there's three there. Yeah. Short, happy. Yay. One hit, in, out, done. But look, retail trader, in, long, stop under the low, stopped out. Retail trader, in, long, stop under the low, stopped out. Retail trader, in, long, stop under the low, stopped out. Me, in with 3 positions and out and happy. Why? Because it's massively extended. You know they're going to profit take that move at some point. I'm just waiting. Yeah, don't get out because the market moves against me. I get out when the market is in profit. There's another one. That one's a nice in and out. Yeah. In, stop under the low, stopped out. In, stop under the low, stopped out. In, stop under the low, stopped out. This is the same trade, isn't it? Aussie dollar. Yeah, just done this one. Or was it another one? It was another Aussie dollar, wasn't it? It's pretty much the same trade as a different one, isn't it? Aussie Swiss. Oh, I don't know which one that was. Anyway, Aussie US. Yeah, that was pretty much the same as the Aussie US, but that was a different one. in, whoom, slam, in again, stopped out on all of those positions if I was using a stop, out, propulsion gap, exit, retest, propulsion, retest, propulsion, retest, propulsion, retest, break, structure, long. Where's it going? Probably this afternoon, knowing what the CPI figures are going to do. We've also got that gap fill down there. Look. But CAD Swiss, let's see if I can find some more good examples. Just position trades. Here goes one. CAD Yen. Right, so this was an ADR reversal. So ADR reversals, I run at a quarter ADR entries instead of half an ADR. So these are faster scalps. So in, out. That was 0.5% profit. In, somewhere in here, out, 0.5% profit. So scalps, I'm looking for a quarter ADR move, that's all. Tiny, tiny profits. There's one there. So in there, out. So RSI extension on the hourly didn't work out. You would have had your stop above the high, stopped out, pushed up, short, stop above the high, stopped out, pushed up, short, stop above the high. That one would have worked. All three of mine worked because that's massively extended and they need to do a profit take on the move. Banks are buying to get out. They need to become sellers. When they become sellers, they drive the market down. They cause a selling frenzy. Everybody jumps on board short and it boom, pops. Yeah. Buying, exiting, buying, exiting, or selling, exiting, selling, whichever way you want to look at it. Market structure is caused. And look at the stop runs. Look. Every time you run the stops, you pull it back. You entice them back in again. They put their stops. You run the stops, entice them back in. They put their stops. Rinse, repeat, rinse, repeat. It's how it moves. It's how the market works. Short. This is a really good example. This one. Look. Oops. Yeah. So got in short here on the hourly RSI extension. Then we got a squeeze and there was no reversal alert. We didn't get a structure break short on the 5-minute chart the entire day. This thing just went like a rocket. So my first opportunity after that push and pullback to get in was there. Yeah. So by the time I got into that second, we were massively extended above the 80. Huge extension on the RSI. Yeah. Got out on the profit take move on that. Yeah. So this move here and that move there is one move by the banks. This was their profit take move because they're long on it. They just added straight back in. Yeah, this is why you don't target with mean reversion. You don't target much. You target a quarter, half an ADR, 3/4 an ADR, one ADR would be max, right? Because you're getting out fast with a profit. The idea is to make profit, yeah, not to be right. That's what everybody's trying to do. Everybody's trying to catch the high and get that big 10 ADR move and put it in Telegram and Discord and go, "Wait, look at me, I've got a massive trade." My idea is actually getting money in my P&L. That's more important to me than having a glory shot on the forums. I'm not interested. Leave that to the trading educators. Yeah, there's one there, one shot out. But look, yeah, ADR, there's two trades there. ADR is 106. That move 131. So there's 125 ADR. This move down here, 1083. It's 100 ADR. Yeah. Push up, 100 ADR. Reversal alert on M5. Enter, exit, quick, in, out. Profit take by the bank. I don't know whether they're doing that or that next. So I'm out. Because if they do that, I'm not going to make money, am I? So I'm out. Just put it in my bank. Pushes down, hard, enter, out. Not sure if they're going to do that or they're going to do that. Which market structure are they going to do? I don't know. No one knows. So don't try and predict it. Just get out with the money. But look, short there, stop loss, perfect. What a trade. Absolutely perfect. There's one with a stop loss that worked first time. Entry, stop loss, I made money. Stop loss traders didn't. I can give you hundreds of these examples. There you go. 2 more there. 1 there. 1 there. These are beauties. Look, that's a perfect one. Look, long. Stop under the low. Stopped out. Not me. Profit. Entry. Stop at the high. That one worked perfectly. Yeah. Some of them work perfectly. Yeah, and the market reverse alerts EA will trade all these for you. You can trade all these, no problem. You can use a stop loss. It does both. Entry. I was wrong. Moved down, didn't get out. Moved back up. In drawdown, pushed up. Second entry, out. 4 days. I don't care how long it takes. You know, but I could have got out down there, couldn't I, with a little bit of profit? I didn't. Well, I didn't. The EA didn't, because the EA is not told to get out there. The EA is told to get out with a decent amount of money. So straight in. RSI extension to the upside. Short. Didn't work out. Didn't get a chance to take a second position because that was close, too close. Less than half an ADR. Push down anyway and out. Yeah. This is what RSI is for, measuring strength. Yeah, this is my banks have gone too far. They need to get out of some of their position indicator. That's what it's saying. It's saying the banks have pushed hard. Likelihood is they're going to pull back on their move. Banks have pushed hard. They're going to pull back. Banks have pushed hard. They're going to pull back. Hard back. Sometimes it takes multiple entries there, possibly in that case. That one didn't take. That one I did. Yeah. Position trading. Much, much, much less stressful. This stream is seriously informative. Good. That's the point. Have you had a look at Euro US dollar? I have, yes. In 1.5 hours, it's going to move dramatically in one direction. I can't tell you which because I don't know which way the CPI figures are coming out at 12:30. So there's no point in doing an analysis on it because it's just going to go wherever it wants to. You showed a few minutes ago on Daily FX, Tom. Oh, the client sentiment over here on Daily. Yeah, on this website. This is updated every 4 hours on here. Historical. So this is a 4 hour window. Every one of these is 4 hours, 4 hour candles they show. But you know, you don't. This is all on my website. It's all on here. So just this is updated every hour. Mine's updated hourly. I don't think Warren Buffett or George Soros are using stop losses. Absolutely not. Of course they're not. I know Warren Buffett, George Soros, Larry Williams, all of the big successful traders, they literally just trade the indices or futures markets. So they're trading hogs and oil and all sorts of other stuff. But they are scaling into positions. They have big bank accounts. Yeah. If you have billions, you will not get stopped out. You get into positions with intelligence that tells you which way the market is likely to go based on whatever is driving that market. In this case, it's fundamentals for Forex. And you get in line with that and you wait for that market to do that because you can't control when it goes up and down. George Soros and Warren Buffett have no control over the market. They don't tell you when it goes up and down. It goes up and down when it wants to. They get in and out when they fancy it. But no, they do not use a stop loss. Remember last year when views were 10? Now look at your 100 views right now. Proster. Yeah, it's good, isn't it? 117 now. We got up to 140 something today. I almost hit 150. 132 likes though. I'm quite happy with that. We've got more likes in here than we got people, which is nice. Which means people are coming in and going out and coming in and going out. And obviously people watch the replays, which last forever. I don't know why I've suddenly become popular. Maybe it's because suddenly people have gone, Jesus, did you know if you don't use a stop loss, you can actually make a load of money? What? I think there's been a shift, you know. The stop loss crowd, or the no stop loss crowd, used to be a thing I remember on Telegram. And that's one of the reasons I started looking into it, because there was a thing, you know, on Telegram, people would post trades and there wouldn't be a stop loss on them. And all you'd get is like, no stop loss, gang, no stop loss, gang, going to blow his account. Looking back at it now, those people were not using 1% risk or 2% risk. They were using small risks and they would continuously post profits. Weird, isn't it? The people chanting, no stop loss, gang, going to blow his account, are the ones that are still system hopping today. I don't know, because I'm not in any Telegram groups anymore or Discord, because I just can't do it anymore. People full of people that know better than everybody else. That's basically what they are. Can the EA do position trading? That's exactly what the EA does. So the market reverse alerts EA, that is its job. Yeah. So watch the video. This video here shows you all of my main core strategies running, and they're all position trading strategies. So all the strategies on the website are all position trading strategies. The core ones are just the mean reversion ones and the trend-based ones, and this is hedging. But yeah, that's what it's designed. That's what it's built for. It's people are using it with a stop loss. I'm using it with a stop loss right now. Look, on here and here, all of these have got stop losses on. Yeah, so the EA is taking all of these trades for me, but every single one's got a stop loss. So it can trade with a stop loss too. It can do drawdown control. It does everything. Everything I teach in the bootcamp can be executed with this, apart from aggressive drawdown control. That it can't do, because aggressive drawdown control is a personal thing. You decide when your comfort levels are hit, and you need to decide on the levels you do your drawdown control, your aggressive drawdown control from. That's the only thing the EA doesn't do. How do you manage the 5% daily rule on my Forex funds? I don't trade it, do I? I don't position trade on my Forex funds accounts. You can't position trade on my own account. What's my favorite pair? I don't have one. The one that makes me the most money. Everything moves, yeah? There's no favorite pair. If stuff goes up and down, I trade it. Doesn't matter, does it? Everything's my favorite pair. Look. That's my favorite pair for that long. Aussie New Zealand, that was my favorite long and short on that pair. That day Aussie US was my favorite. CAD Swiss hasn't been my favorite. That one, my favorite. CAD Yen, on that day, that was my favorite. I'm not interested in having a favorite pair. Everything moves. Everything has market structure. Everything has market structure. As long as it has market structure and it moves, you make money out of it. Some move more than others. You didn't answer my question, Proster. I did. Which one was your question? Remember last year when we were back at 100? Yeah. How to manage the 5% daily rule on my Forex funds? I have answered that. I can't. You can position trade. I have position traded, right? So my Forex funds, one of my Forex, I'm just looking at you just reminded me to look at my account because I've got a load of open profit on it. One of my Forex funds accounts, I position traded in here. I passed phase 1 with it. Yeah, didn't I? I don't know if you were here. And phase 2, I got to about 70% of target, and then I got squeezed down to 5% and it blew. On news. It was on news. It was on the, I can't remember. It was one of the news. It was CPI or it was an interest rate or something, but it blew on that, basically. And that is my point. That account, I passed phase 1 onto phase 2. Phase 2, I'm about 80% to target. Yeah. And then I have a news event that goes against me and I blow phase 2, right? If that news event had gone with me, I'd have passed phase 2. Yeah. And this is what I keep saying. The difference between a pass and a fail on a prop account is nothing to do with your system, the strategy, the way you trade. The pass and the fail is designated by the market movement. You have no control over this random object that moves up and down on your screen. If you take a trade there, it has a 50-50 chance of going up and down. buttons you press decide whether you pass or fail, granted. But the way this thing goes, you have no control over. So on my prop evaluation, what happened was I was 80% to target. I got the news went against me. Yeah. I dropped down to maybe minus 1,000 and I had a minus 5,000, a minus 10,000 max loss on this account because it was 100K, but they blew the account. Did I go anywhere near that? No. That's 10,000. Yeah. No. But the 5% daily drawdown rule got hit. What happened afterwards? They moved the market down and they did a profit take move. If they hadn't have stopped my positions out because of the 5% daily drawdown rule, I would have passed evaluation. Yeah, it's pure luck whether you pass an evaluation or not. I don't care what anybody says. I know the statistics. Less than 1% of people hold a prop account for more than 3 months. Less than 5% of people hold a prop account and get paid in their month 1. Why? Because it's virtually impossible to stay within a 5% daily drawdown rule. You can't, because the market won't allow you. If you're risking 1% a trade, yeah? But if you're doing that, you're gambling, aren't you? Yeah, risking 1% a trade is too much. If you have a strategy with a 50% strike rate, yeah, and you take 10 trades, 5 of them are going to fail. If the first 5 fail, you blow your account. If the second 5 win, which they will do because it's 50%, and they are 2-to-1 risk reward ratios, you would pass your evaluation. But the fact that the orders, these 10 trades you took went 1, 2, 3, 4, 5, 6, 7, 8, 9 pass, the fact that they landed in that order rather than that order was the difference between a pass and a fail on evaluation. Your system, your strategy, your strike rate is still the same. Your effectiveness of your strategy is the same. Your P&L will go like that regularly. That stops you out of your account. That makes you go back to stage 1. However, afterwards, that you never see because you're stopped out. That's what systems and strategies are. Most systems and strategies have a strike rate between 30 to 50%. Prop firms know this. There are a few strategies with around about 65% strike rate. They are all mean reversion and they all use a 1.25 to 1 or 1.5 to 1 R to get those results and get that strike rate. Yeah. They are very, very, very hard to execute and they will take a long time. People haven't got patience in prop. So they don't work. They don't work because the 70% of your losing trades will happen straight away because you're risking 1%, you blow the account. If you risk 0.5%, you'll have a much better chance of passing evaluation, but it's going to take you longer, possibly over the 30-day max, which means you go back to stage 1 because you didn't hit your profit target. That annoys you. So what you do is you up your risk, then you lose the account. This game is rigged towards you failing. There's nothing you can do about that, which is why I take so many evaluations and I just wait for the ones that work and I milk them and take the money out. And that's the way to do it. Mr. Weak, he is your enemy. He will take you out of the market and he will blow your account. He will very rarely be celebrating because 90% of the time your trades don't work, do they? Why? Because you put an order in the market which says, take me out. I'm going long. I'm going to put a stop loss there. Okay, no problem. We'll go long. What? Why didn't you go with me? Well, you told me to take you out. Lunacy. Your views increased, maybe because of Mr. Wick AI image. It might be, yeah. Mr. Wick might be because we got so. That might be why we get so many views. Everybody loves Mr. Wick. Mr. Wick. That was the DAX today, Mr. Wick. Mr. Wick. You do not trade when Mr. Wick is in the house. Nasty. This will all kick off this afternoon, though. As soon as those CPI figures are out, that thing's going off. Don't know which way, but it's going off. EJ, watching from the Philippines, welcome. Emil, I can't check gold. If you go and watch the replay, 30 minutes in, you'll find that. I get asked for gold so much. I accidentally discovered this channel. Suggest you try advertising like Nirav for a week. I don't want to, Big Zero. I don't need to. I'm not here to make money out of YouTube. That's not my job. My job is to trade. I love having more people in here. It's lovely because you get asked more questions. We spend more time in here. My average stream time has gone up from like an hour to 3.5 hours now because I get asked loads of questions and we spend a lot of time in here, which is good. But I don't need to advertise. If I advertise, I'd have to sell a course. So I could make the bootcamp, which is free. I could make that chargeable. But then, you know, I'm an educator, aren't I? Those that can't teach. YouTube algo started pumping your channel here in Canada to me late last night. I don't even trade Forex. But the thumbnail was good enough to get me a click. The thumbnail's not that good. It's just a... that's the thumbnail. Anyone successfully trading DAX this morning? Nope. I don't know. I think something's changed in the algo in YouTube, basically. So, which has suddenly started pumping my channel a bit more. I don't know why. I don't know. Will you follow the big move for Euro US dollar? I will be. Yeah, we'll look at it this afternoon in the New York session. I'll be back on at 120, and then we'll have a look at what the fallout of CPI is. But I'm long US dollar at the minute. Main overall positioning is long US dollar. So I'm hoping CPI figures come out positive. If not, I shall be making a loss. We've already got ripped to pieces by the DAX this morning, so hopefully we do get positive CPI. Positive. There's a difference, yeah. Like when you're using a stop loss strategy. So I've lost $350 on the DAX this morning. If the US dollar goes long on the CPI figures this afternoon, I will be banking $800 on those three positions, which puts me a $500 win. Yeah, that's different. You know, just you got to sit there. Wait, I have no control over this. And this is the thing. You know, that's what that video on the website is all about. Yeah, this one. Thanks for the follow. Thanks for the follow. Oh, Jesus and Fabricio. Sorry, I didn't see you. And Al and JB. I'm missing people. I'm not listening, am I? And Rich Janess. This video on the website. Let's get rid of that. Yeah. As soon as you realize it doesn't matter what you do, I'm long US dollar. I'm either going to make money or lose money this afternoon. I have no control over whether that goes red or green. The market controls that because I'm using a stop loss. If I'm not using a stop loss, I can do something about it. But because it's a prop firm, I have to use a stop loss. Because if this goes into drawdown by 3%, I don't care. I can manage that and I can get out of that position. But if it goes into drawdown by 3% on a prop firm, I've only got 2% worth of drawdown left, which means I'm getting close to blowing my account. You can't do it. This is why passing prop is so hard, because you have to trade within their restrictions and their rules are too tight. Nothing you can do. But when you pass, you get 100 grand. And all I need is 2 lucky trades with 1% risk, and bang, I've got 3-4 grand in my pocket, and I draw that out. And then I go back to square one and I keep doing it till I blow the account. But you're going to take many, many evaluations. This is what everyone tries to do. This is the problem with prop. Everybody's going, oh, look, I'm going to pay $500 and I've got the chance of getting a 100K account. Yeah. What on earth thinks the risk reward of that is something that is going to be biased in your favor? It's not. You need to take 10 of those. Yeah. If you take 10 evaluations, i.e. go for $1 million worth of funding, you will get 1 or 2 of those over the line. Out of those, after you've spent $5,000 on 10 evaluations, you've only got to get one of those to 5K in profit on 100K. So if you risk 2% a trade on one of those accounts, yeah, and that first trade works and it gives you a 3R return, you've just broken even. On that account, you take a 1% risk on 2 trades. One of them fails, one of them works. You make 3%. That's $3,000. Stop. Wait for payday, draw that out, then start trading again. That's how you do prop, because you are not going to pass evaluation because you're taking evaluation. Don't care how good your strategy is, what your strike rate is. You're going to have a losing run and you're going to blow a prop. Take 10 of them. You will pass one, guaranteed. Then you've got a 100K trading account. Then you've only got to make 5 grand. You know you can do that because you just made 20, didn't you? They're making you make 8% in the first one or 6% in the second. So you've made 14% in 2 weeks. You can definitely make 5%. You've just made 14%. You've just done the impossible. No one out there makes 14% a fortnight. No one. No one. If that was the case, Warren Buffett would be snapping my arm off and giving me 20 million quid to trade his money. Not doable. Not sustainable, I should say. It is doable. It's not sustainable. How to use algo to trade structure. Use the market reversal alerts EA. This will trade market structure for you. Market structure breaks based on RSI extensions or ADR extensions, as taught in the bootcamp, basically. So FTMO is better. No, FTMO is not better. None of them are. There's no good ones. There's no good prop firms. They're all good and they're all bad. What's the tab beside the chart? Well, this is just the market watch. The question is how can you trade and make YouTube on the same times? Because most of my trading is automated. I'm sitting here and I'm having trades triggered. Look, I didn't take any of these. The market reversal alerts EA did. Yeah, everything I do is automated. The trades I lost today. Oh, got no comment. These were taken, these DAX ones, by the opening range breakout EA. This one, not that one. Opening range breakout EA. This one, ORB EA. Yeah. So this trades the open for me. The other one trades market reversal alerts for me on extensions. And I have my Forex funds account running, which is also taking trades fully automated. Yeah. All I do is I literally watch my P&L and deal with my P&L. So my job, and you'll learn if you do the bootcamp, you'll learn exactly how I do everything. But if you, where's that MT4 gone? I didn't open, did it? Whoa, what's that? There we go. So my job is basically to manage this. So my focus is my P&L. So everything that's green, just fine. It's fine. It's working, isn't it? Everything that's red, I focus on, basically, and I deal with. And these are the areas that I focus on because these are the areas that aren't working. Sorry, bear with me 1 second. I just had a doorbell go. Doorbell goes every day, doesn't it? Sorry about that. I'm like a glorified doorman in the day. My wife goes out to exercise classes most of the day. So, and then she arranges for all her deliveries to arrive, that she buys stuff and she sends stuff back and things. And then in the evenings, I go out to exercise classes and all she gets to do is sit down and watch telly. I have to be a doorman. So that's basically what I do is I focus on everything that's red. Yeah. And I manage this. Anything that's green, you don't need to worry about it because all of the green stuff is going to do is just get put over there. It's reset again, isn't it? That's it. Every time you open MT4. I need an EA or a script that automatically sets this and stores it. So, this is being produced automatically by the EA. Yeah. So I don't need to worry about that. My job is every few hours to check my P&Ls on my accounts and look and see if anything's getting out of hand. And if it's getting out of hand, decide what to do with it. That's my job. So literally all I do all day is watch these P&Ls and make sure the exposure's controlled and make sure the drawdown is kept within reasonable limits. But look, see, this is how you make money. 17% return, but it's in 6.3% of drawdown. Yeah, prop firms don't allow you to do this. Why? Because they know damn well they'll have to pay out a load of money. They don't want to do that because they don't give you real accounts. They're paying you out of the money that is generated from evaluations. So they need to keep this at a level that will stop you out. Most traders, me included, will sit here in 10 to 15% of drawdown, no problem to get this return, because my account is there to be used for risk. If you're not going to let me put the risk on, I'm not going to be able to make the money because I'm not going to be able to stay in the market long enough for the moves to play out. Which means I have to do what? Become a sniper and catch the exact bottom of every move, which is impossible to do because the market is designed to stop you doing that. It's all geared against you. But you will have lucky runs. How's the compounding account going? I stopped doing it. I couldn't be bothered. It was only $70. Yeah, I should do that, shouldn't I? I think I've only got I lost $20, so I think I've got $50 in it still. I didn't get any margin. That was the trouble. I couldn't get the trades on because of the margin. I wanted to add, so I had a trade, went into profit, pulled back. I wanted to add to it, and I can't add to it because I've got no margin left. So if I can't add to my winners, I can't. It's very hard to compound with just one trade. If a move starts and it's going my way, I want to put more money on it and stick more on it and blow it up and, you know, make a load of cash. You can't do that. So I need more money. I need to put more money in and start a little, maybe a $200 account or something. But all I'm going to do is lose it because I'm going to prove to you that compounding doesn't work. Or I'll prove it will do. But at some point, I'll prove it won't I? Because I will get to the point where it just will blow. It just doesn't work. Where do you see gold going? I don't know. Opposite way of US dollar. CPI is this afternoon. If US dollar goes down, gold will go up. If US dollar goes up, gold will go down. It's Big Ben that did it, was it? Did it? Yeah. I don't know. Maybe that's why I don't get so many people in the New York session. Because the New York screenshot is the Statue of Liberty. So maybe because the Statue of Liberty is not as good as that one. I don't know. Maybe I should change it from the Statue of Liberty to the Empire State Building. See if that affects my click-through rates. I don't really care. Position trading is relaxed. Doesn't need to consistently watch the charts. Yeah, exactly. So that's exactly it. Once you make it chargeable, you will face piracy. I know, I did. I ran a course about 4 years ago. The very first version of the position trading bootcamp 4 years ago. I used to charge $50 for it because I didn't want to charge. I'm not, I'm not here to make money out of people. I'm here to educate people. And I started charging $50 for it just for my time because it was taking up my time. I was running a private Telegram group for the people. And literally within a week of it being out, there was some idiot in Telegram saying, do you want to buy it for $25? And I was like, what the hell is the point? If you create a course, within days, it's out on the web. So what's the point? Yeah, all these courses you see flying past, you can find them for free. Yeah, if you know where to go and how to look and all that sort of stuff. Yeah, there's no point. So what you end up doing is only grabbing the people that don't know how to find free trading courses. And those people are usually very far behind in their trading. And you're starting with novices and you're trying to teach them what a candlestick chart is. I'm not interested in that. I'd rather help people that have a will to help themselves. Anna, you're trading with 25 euros. That's tricky. Philip, I heard Fortnite. What, the game? I don't play Fortnite. It's not me. I know, wish me luck. Yeah, you're going to need it. You're going to need it. Philip, you too. You heard Fortnite. What do you mean? I didn't mention Fortnite. Or did I say something wrong? I don't know. How is your compounding? I was talking about that. Does MT4 allow auto trading? Yes. That's what it's designed for, MT4, really. Auto trading. It's very, very, very good. And back testing. Obviously, it's got a very good back testing system as well. Much better than most platforms. I would say, well, not better than most platforms. For CFDs, it's great. If you want to trade futures, then for back testing, you'd be using, God, I've forgotten the name of it. There's others out there, but it's good. Are there any stats you have about the opening range breakout EA? No. Only what's on the blog post linked from the EA page. So there's backtesting results, yeah. Check oil, lovely buy. Yeah, it is a lovely buy. I really do fancy oil. I'm just worried about taking it ahead of the news because I've got to use a stop. In fact, actually, let's look at this because I might be able to get this. How far is it? Yeah, see, it's too far. It's 1.25 ADR to a realistic stop position on this, which should be down here somewhere. In case this dumps on the news. But if it dumps just down underneath there, 125 ADR, I put a 17 pip stop on it, which is half an ADR. I think I like that, but the trouble is I don't think I've got any margin. Yes, I have. What's the oil margin? Let's have a look. Ah, can't trade oil. I don't think you can trade oil on this account. Look, you can't trade oil on the fivers. That's what I was thinking. I really fancy that. Why am I not in it? That's why. There you go. I can trade it on my other accounts. In fact, I haven't got an oil on. I've got a gold on at the moment. No, I haven't got a gold on, actually. Have I got a gold on? No, I haven't got a gold on. I did have a gold on. I haven't anymore. I'm waiting for gold to get down to 1860. And then I'm longing it. There. I don't know if it's going to go up, but when it gets down to there, I'm looking for a quick long, whichever way it goes after that. I don't care where it goes as long as it bounces. How long have you been trading? Me? 14 years. 15 years? 14 years. Do a poll, random heads or tails. Why? What, for long or short on something? Yeah. I did, maybe I'll do that this afternoon. I might do that for CPI. Let's do that. I'll tell you what, let's do that. Shout heads or tails. Anybody. If I get multiple heads or tails, I will pick the average. And I'll go long or short on pound US dollar. Tails, oh dear. What is a candlestick chart? I haven't actually been asked that one. So ask Google. Oh, that's a better idea. Let's let Google decide, shall we? Sorry, you can stop saying now. That's a much better idea Philip's just come up with. Is it ahead? We're long. Long pound US dollar. Right, we've got news, haven't we? Let's not go down to stupid time frames. Either way you look at it, it's there, isn't it? So I'm looking at, look at this MT5 redraw. It's awful. Such a shite program. 205 points. So I go to 20. 1% risk. Right, you can stop now. Look at this redraw. It's awful. I don't know how anybody trades on this platform. I really don't. There's nothing wrong with this indicator at all. Maybe there is. I don't know. But it's just doesn't do that on MT4, does it? Right, so I'm going long. There we go. I am long. So you are costing me $250 or you are making me... Where's ADR? Let's go for it. If CPI comes out good, we could look at 150, couldn't we? Making me $2,000. Well done, everyone. Update this afternoon. I am now hedged on the US dollar. Dun, dun, dun. Most people, I think, were saying heads. I know most people were saying tails. Oh, that's a mix. That's a mix. Ask ChatGPT. Yeah, it's easy to do it on Google. WRB works great for MT4. It does work great for MT4. Look, MT4 doesn't do that, does it? At all, right? H1. There's all my WRBs. Let's switch. Oh, look, they're all there. Is there any redrawing? No. Same indicator, same code, converted to MT4, to MT5, and MT5 does that. This is why I don't use. This is why 95% of my indicator sales are on MT4, not MT5, because it just doesn't work. It's a terrible platform. They update it, they introduce a bug. They release a fix for it 2 to 3 days later, that breaks something else. And the indicators are just so sketchy. The EAs are everything's just sketchy on it, which is why there's no adoption from the brokers. It's just terrible. DAX has broken out to new highs. Okay, so we are going for that run. Bit late, DAX, aren't you? So we are going for that run up to the highs, look. Up to the lows, rather. ADR is resistance, and obviously we've got this massive propulsion gap caused by yesterday. So I'll be watching ADR for shorts, but obviously that will be determined by the news anyway, if it's going to get there. This might just be making a new high to come down and sit in this area, but we'll see. Anyway, it's 25 past 11. I've got to be back on at 1:20. I need to get some work done. It'll be time for the afternoon session soon, as Diana's just said, yeah. I mean, WRB, I hidden gaps, yeah. WRB. Right, I'm going to leave it there, guys. So anything you need, I'll be in the Telegram group. Pretty much going to go and make my lunch now and then get ready for the afternoon session. But 12:30, obviously, be prepared. 1 hour. We're going to get the CPI. If it comes out as expected, of course, there is the potential for a flatline move. We won't get any movement at all. So we could well come out with expected. We've had 2 forecast expected returns for the last 2 months. So if it comes out as expected, I don't know really, honestly, whether we get a positive or negative move on it. So we will see, but we'll see what it comes out as, and obviously it will go where it goes. And then we'll find out later where we're going. So, all right, have a good rest of the morning. I'll be back at 1:20 for the US session, back tomorrow morning at 7:50 for the Frankfurt session as usual. Anything you need, Telegram group. And hopefully you guys have made me an absolute fortune by going long on pound US dollar. To be honest, if this thing gets to $350 by the time the news is out, I'm probably going to bank it. Just being honest, I'm going to bank it. Just to get that DAX back. Because I'm hedged. So, yeah. Or shall I bank it? I might just break even it. You never know. Anyway, odds are 50-50, aren't they? Okay, have a good one. I'll be back 1:20 and we'll see what the outlook is from CPI from there. All right, speak to you later.